there. And again, in the conversations I get to have every day with business owners, I see that on a kind of case-by-case basis. There's optimism there. That makes sense. If you look back at 2022, part of the strength that we see in the market today is that people were building in a potential recession in 2023. So they kind of tightened their belts and looked around and said, hey, what do we need to do to prepare for a recession that ultimately didn't happen? And so as a result, many of those companies have a core strength going into 2024 right now that results from some really conservative behavior. And I think particularly in manufacturing, that is a great example of that. So I think a lot of people are coming from a very solid foundation that isn't as interest rate restricted as we mentioned before. And so as a result, I think they're going to do well as we move into this year.
One of the names that you guys talk about is Parker Hannifin, based in Cleveland, Ohio.
A good Northeast Ohio company, that's right.
That yes. Is manufacturing. The stock's up 11% year to date, up about 47% over the trailing 12 months. So it's been a good call. What's your play there?
Well, I think there are two things that are kind of a good news, bad news scenario. One of them is that as manufacturing and industry kind of recovers, they're going to recover, right? They benefit from that as their core business. And that's the good news. The bad news for them, or maybe for other folks, is they really benefit from people like Boeing and Airbus kind of stubbing their toe a little bit. So as Boeing has suffered some bad news, that's kind of good news for Parker Hannifin. Unfortunately, it doesn't look like that news is going to go away anytime soon. And so we think that's a play and something that our folks are looking at.
You know what Paul did? He left me Exxon.
That
was so sweet. And there's Microsoft. We'll get to that. But you like Exxon. I can't blame you after that quarter. What do you like about them? Could you still buy here?
Yes, I think so. We've been excited about them for a long time, and obviously it's kind of funny to come back and say we're still excited. We still think it's good, and fortunately, good earnings news kind of played out well there. We think their play in the shale, the Permian shale, where they are right now, that is kind of just beginning to come out. And I also think the fact that they are a much more vertical company makes a big difference. You know, because they have the opportunity to, if oil is volatile, they're still working on the chemical side as well. So we think the vertical nature of their company makes it something that is a lot more attractive than even others peers in their sector.
Alex, do people even talk about peak oil anymore?
No. But I mean, yes, no. That'll always come back. But if what we've learned in the past 15 years is that U.S. oil companies will innovate like crazy, and they can execute. Like the Permian Revolution and the shale revolution, that happened from like the small guys, not the big guys. So as long as we have that innovation there, it's going to be hard to really see that.
ExxonMobil.
It's a peak demand thing.
Yeah.
That's
the question. Are we at?
We're definitely not at, but that's what we're definitely headed to that at some point. Hence Saudi Arabia, pulling back on what they're going to be producing in terms of 13 million barrels a day and developing to 12 million, right? Like you have, the end is coming, but it could be coming like 40 years later.
Saudi Aramco going to do, a secondary offering now with Goldman Sachs and Citi, $20 billion offering. So it's a nice payday. We'll see how that goes. Because I got Brent crude still at $80. Good time to sell some stock, I would think.
Right.
All right, another, I think, name that our analysts here at Bloomberg Intelligence are super bullish on is Microsoft. So what's your call there?
Again, kind of singing the same song. I hate to do it, not particularly innovative, but I think if you look at it, we used to talk about Microsoft as, a computing company. Now you look at it and say they're computing, they're a cloud company, they're a gaming company, they're AI company. And in particular, if you look back, they're really starting to report meaningful profits from their AI business. And so obviously we think that's the beginning of a wave as well. There's lots of reasons to think that Microsoft has some upside.
I'm looking at the A&R function for Microsoft. A couple things jump out at me. First, 65 analysts cover the stock.
That's a lot.
How efficient is that? That's a lot.
Yeah.
60 buys, 5 holds, no sells. So Street likes it.
Yes. What I also love about these picks is that these are like, I appreciate Microsoft is at the forefront of AI, but they're also like old school real economy companies. Again, I realize that Microsoft might be treading that line in a big, big way, but like a Parker Hannifin and an Exxon, like these are not, we're going to get into a recession, everything's going to be terrible, you can only bet on AI.
Right. Well, I think, Alex, that's right? Exxon's another example of where you've got wonderful core fundamentals in that vertical piece that we talked about. And on top of that, they've got the horsepower and ability and a track record, I think, in both cases, to do the kind of innovation that's going to bring them into the future in a meaningful way. And those are the kind of companies we really like.
All right. Very good. Dan, thanks for making the trip in
Thanks
from
for
Ohio.
having me.
Dan Griffith,
Yes.
Senior Vice President and Director of Wealth Strategy at Huntington Private Bank, making the trip in from Ohio to the Bloomberg Interactive Broker Studio. And again, the Huntington Bank, they they manage the extensive wealth of one Matt Miller. So I mean, that's like it's like a whole wing, I'm sure.
So if he was here, how much of the conversation would be that?
Like what's going on with my bank? I got questions about my account.
Like that's
yeah.
Like a
we
good
kind of got
chunk
off track a little bit.
That's
so.
not at all surprising.
No, not
we
at
got
all.
on track there. Parker Hannafin, Microsoft, Alexon Love.
Very good. Looking at the markets here, kind of quiet, as we've heard from John Tucker this morning. Really not a movement at all at the index level, despite all the earnings and company-specific items going on underneath the hood. But we'll stay on top of that. Market's essentially unchanged. Right now, let's head down to Washington, D.C. We'll get world and national news with Immerse.
Thank you, Paul. The U.S. says a drone strike in Baghdad killed the leader of the Iran-backed militia that killed 3 American soldiers last week. Meanwhile, Secretary of State Antony Blinken trying to broker a ceasefire between Israel and Hamas. But Israel's position is hardening. Bloomberg's Ed Baxter with that story.
This comes as Prime Minister Benjamin Netanyahu has summarily rejected the Hamas proposal. Blinken says the Hamas response does have some non-starters, but he will continue working on a plan, he says, and won't give up.
Our focus today is on all of the diplomacy needed to bring it about, including, again, getting ideas, getting proposals from all concerned, and putting those together in a credible and clear plan.
Blinken says getting the hostages out is a very, very high priority. Ed Baxter, Bloomberg Radio.
Senate Republicans delivered a death blow to efforts to secure the border with Mexico. Republican Senator James Lankford helped negotiate that bipartisan deal and said his political career was threatened.
That told me flat out, if you try to move a bill that solves the border crisis during this presidential year, I will do whatever I can to destroy you, because I do not want you to solve this during the presidential election.
The Senate is going to try again today to move the bill forward, but this time without those border provisions. German Chancellor Olaf Scholz warning of the dangers of a Russian victory if Ukraine's allies don't increase military support. In an opinion piece in the Wall Street Journal, Scholz writes, quote, "A Russian victory in Ukraine would not only be the end of Ukraine as a free, democratic, and independent state, it would also dramatically change the face of Europe." Scholz's warning comes ahead of today's meeting with members of Congress and tomorrow's White House meeting with President Biden. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Not a lot of movement right now in the major equities. The S&P 500 is within striking distance of 5,000. Energy, the best performing industry group right now. Walt Disney, that is among the individual leaders after its positive earnings report. Shares of Disney right now, they are up 10 points. Up 10%, 10.1% to be exact. On the other side, the biggest laggard in terms of index points, that belongs to PayPal. PayPal shares, they are down 10%. Well, after it's Bob Dole at Crossmark Global Investments has a few reasons to be cautious in this market.
Number one, every week that passes, the expectation about how much the Fed's going to cut rates gets less. Two, every week that passes, earnings estimates for the full year come down a little bit. Three, the stock market is selling at over 20 times earnings. I put those three things together, and I don't know, I can't make the case for a whole lot of upside other than momentum.
And momentum, he says, can be very powerful. S&P 500 right now, 5 points lower, 49.89 on the index. The Dow Jones Industrial Average, 79 points lower. That's down 0.2% right now. And the NASDAQ 100 is up 10 points. That is up less than 0.1%. 10-year is right now 5 basis points higher. That's at 4.15. The 2-year up 2 basis points at 4.44. And ahead of the auction, the long bond, the 30-year, 4 basis points higher. That's at 4.37 right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. So something that's on my radar, it may have faded a little bit from yours, but it is important, is the Biden administration placing a moratorium on LNG export projects to non-FTA countries. It was huge. I was in Florence, and it was a huge, huge deal. Everyone was complaining about it. Everyone was worried about it, and no one understands it. So let's get into it, because Joe Manchin certainly is. So today, this is what's happening. The Senate Energy and Natural Resources Committee, which is led by West Virginia Democrat Joe Manchin, is probing the administration's decision, and they're holding a hearing on the issue at which Deputy Secretary of Energy David Turk will be there. This is just one of many hearings on this, as many got a lot of head scratching when this came out. So let's get some more insight here. Dustin Meyer is Senior VP of Policy, Economics, and Regulatory Affairs at the American Petroleum Institute down in D.C. What do you think, Dustin, we can expect? I realize for some people this may feel niche, but this is a huge moment for energy in our country in terms of wealth and in terms of security.
Yeah, you got it right, Alex. I mean, the benefits of U.S. LNG are clearer now than ever. I mean, the role that U.S. LNG has played, especially in the last couple of years, in helping our allies in Europe displace Russian pipeline gas is really difficult to overstate. But beyond the geopolitical benefits, the benefits to the U.S. economy are equally obvious. These projects are enormous creators of jobs down in the Gulf Coast, wherever they're developed. This is a really good thing for our country. This is a really good thing for our allies. That's why we think it's so unbelievably misguided for the administration to be issuing this pause right now.
What is the reasoning from the administration for issuing this pause?
They would cite a lot of things. I think most people would agree that this is pretty nakedly political in what they are doing, but they would cite concerns over what is the impact on domestic natural gas prices? What is the climate impact? And how does this play with the evolving transition around the energy landscape? We think at this stage, we don't need to do studies on this anymore. We have the proof. We've been exporting for 7 years. We have the evidence that can show the enormous economic benefits, that can show the enormous geopolitical benefits, and that can show the enormous environmental benefits. Everywhere around the world, when gas gets scarce, countries turn back to coal. That's why it's incredibly important for us to maintain that reliable and abundant supply from the United States.
And which, Paul, it's also a head scratcher, because if you're worried about methane emissions from natural gas, then like limit production. Like why export? Like export's the end game, right? So that just was a little bit of head scratcher too.
Yep.
So Dustin, I mean, fair enough, it's political. So why do we really care? Come November 6th, isn't this just going to all magically go away?
Well, it depends on the, incoming, what the result of the election is, but we think that there's already serious consequences of doing this pause. There's a lot of buyer appetite out there right now for more LNG, right? Buyers from Japan, from Korea, from Europe, from Brazil, from India, from everywhere around the world. They want more gas. They would love to get it from the United States, but this sends a very chilling message to investors and to potential buyers.
Dustin, how big of a player is the United States in the global LNG market?
Oh, we're huge. So we are right now the world's largest LNG exporter. As a reminder, it wasn't that long ago when the United States was not just an importer of LNG. We were projected by many to be the world's largest importer of LNG. So that massive transformation has, of course, been good for the United States, but that's brought enormous benefits overseas as well. So as the world's largest LNG exporter, it was us who was able to redirect our flows in 2022 to Europe to make sure that they could displace that Russian pipeline gas that their system had become dependent on. It's a really good thing to have these cargoes out there on the water, but everyone recognizes that we're going to need even more. We need a clear permitting process for doing exactly that, and that's what this pause jeopardizes.
Here's my question, Dustin. Where in this may there be a point? Like, where should we be a little bit more judicial in how we issue permits and how things are built? Like, yeah, where's the point?
Yeah, well, no one is suggesting that there shouldn't be a process, but there is already a very well-established and frankly fairly time-consuming process for an LNG export project to get approved in the United States. First, you need a permit from the DOE for exports to free trade countries. Then you have to go through a very lengthy, comprehensive FERC review. And then finally, you get your permit from DOE for exports to non-FTA countries. Nobody's suggesting that we shouldn't have a process. All we're suggesting is that process should be clear and transparent and should use, by and large, the process that not just the previous administration, but the Obama administration before it used. Remember, most of the projects that are exporting today are a result of approvals from the Obama administration, because the Obama administration understood the geopolitical benefits, they understood the environmental benefits, and they understood the local economic benefits here in the United States. That's all we're suggesting, is that we should maintain that review process.
What type of response, if any, can the energy industry do to kind of, either reverse this, get around it?
Call him.
Yes.
And have him go to DC and talk to lawmakers.
Yeah, and look, we have been talking with a lot of folks on the Hill and around the Hill to make sure they understand the ramifications of this. We strongly believe that LNG has a great role to play in reducing emissions around the world and bolstering the energy security of our allies. Our allies have been very clear about this as well, and so we have to communicate around this and make that abundantly clear. I would note that there's so much that the industry is doing, for example, on reducing methane emissions across our value chain. That is a good thing that we're doing to reduce emissions at the liquefaction sites themselves. Those are important questions. We're working on that very hard. We think that cements and even further extends the value proposition of LNG at this time. A lot of this conversation always proceeds as if coal demand around the world has already been eliminated, or that in fact it's falling precipitously. Nothing could be further from the truth. Coal demand last year set a new record level. Most forecasters expect it'll be a new record this year as well. If you look at the energy outlooks for China, for India, for Vietnam, for major Asian economies, you can see they are left with the choice between coal or natural gas. We think that choice is pretty clear. It should be natural gas.
All right, Dustin, thanks so much. Appreciate you hopping on. I know it's a busy day for you. Dustin Meyer, Senior VP of Policy, Economics, and Regulatory Affairs at the American Petroleum Institute. And what he brings up at the end there is the idea of energy equality. It's different to see it here versus like India or Africa or countries that don't have any power or minimal power at all. And then how do you go from something like coal to solar or nothing to solar. Like
Yep.
there's just not the infrastructure
Yep.
or the money to do that.
And I just remember from, the first year of the Russian invasion of Ukraine, European countries saying we're going to build floating plants to what is it?
Reliquify.
Reliquify, yeah.
Yeah, yeah.
So it comes across on the ship from the U.S. and then we can,
Yeah, they have them. They're good.
Yeah.
They're building them up. They're floating outside. They're
Yeah.
good.
Yeah,
It's pretty amazing.
Yeah, it is. So we'll keep on top of that. Alex will make sure we stay on top
I'll
of that,
force Paul.
of that story. S&P and Dow, they're pretty much unchanged. NASDAQ, a little bit of a lift here, up about 0.25%. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
Following, former Barclays chief executive officer Jess Staley has long maintained he cut off his friendship with Jeffrey Epstein once he became boss of the UK bank. But legal documents that have been seen by Bloomberg News claim that he had indirect contact with the late pedophile financier for years after that. Staley and Epstein used an intermediary to stay in touch, according to the documents. These documents form part of the now settled Virgin Islands lawsuit against Staley's former employer, JP Morgan Chase. The filings also contradict what the executive told the Barclays board about the pair's relationship, as well as a UK regulatory probe that found no evidence of contact after October of 2015. Well, makers of everything from snack food to knee implants are facing potential threat from Novo Nordisk's powerful appetite-suppressing treatments, so they're calling the drug maker for advice. Novo's CEO says at least a couple of CEOs from, say, food companies have been calling him. He declined to name any names, saying questions that centered on how the drugs work, how fast they would roll out. They're scared about it, he says. Bloomberg Intelligence estimates that the weight loss market alone could reach $80 billion by 2030. So that's left companies from Walmart to Chipotle grappling with how a less hungry, healthier customer will affect business. And getting piece of the action, Saudi Arabia set to hire banks including Citigroup, Goldman, and HSBC for a secondary share sale in Aramco. It could raise about $20 billion, rank among the biggest offerings in recent years. But you know what? The fees aren't that much. It's just like you get to have some of the business, according to Saudi Arabia. And that's company news.
I'll get paid.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Paul Sweeney here with Alex Steele looking at these markets here at S&P. Absolutely unched on the day. Same for the Dow, let's be honest. NASDAQ's up a third, but not much happening there. On the yield space, we've got yields a little bit higher. 10-year Treasury up about 5 basis points, 4.15%. Oil, as you mentioned earlier, up about 2%, $75 for WTI crude oil. Bitcoin, it finds a bid out there, up 2.8%, 45,400 for the cryptocurrency. How about that? Right now, let's head down to Washington, D.C., World and National News with Amy Morris.
All right, thank you, Paul. The Supreme Court this morning is hearing what may be the most important election case since Bush v. Gore in 2000. The justices are considering whether Donald Trump can be removed from a state ballot under the 14th Amendment. Bloomberg Government's Jack Fitzpatrick.
Focus specifically on the Colorado ruling, of course, that brought this up, where they barred Trump from this year's presidential ballot because of the constitutional insurrection clause, but a lot of broad questions that they'll have to focus on that would carry major implications for other states. A ruling against him means other states could also bar him from the ballot.
Bloomberg Government's Jack Fitzpatrick. Now, the justices are currently questioning Donald Trump attorney Jonathan Mitchell, who is arguing that the president is not an officer of the United States, therefore the insurrectionist clause doesn't apply. Donald Trump is not in the courtroom for today's arguments. 5 U.S. Marines aboard a helicopter that went down during stormy weather in the mountains outside of San Diego are confirmed dead. The military says efforts to recover the remains of the 5 have begun. An investigation into this crash is underway. Crews found the helicopter wreckage yesterday, but at the time could not see the Marines. The CDC is warning about the rise in measles infections in the U.S. There have been 23 reported cases since December, mostly in children who aren't vaccinated. New York City's Public Health Commissioner Ashwin Vasan tells CBS the vaccination numbers in the city have been dropping for the past several years.
I'm worried about the trend if it continues in that direction. It is not just enforcement. It's not just mandates. It is engagement, communication, trust building.
Experts say political influences, fear of vaccines, mistrust in government, and misinformation are leading to lower vaccination rates. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
All right, Amy Morris, thank you very much. I want to pivot off of that story that John Tucker was talking about, Novo Nordisk. So the CEO was in Bloomberg headquarters. I was in that meeting, and I asked him that question. I was kind of joking around, and I was like, hey, so I talk to a lot of CEOs. You see them on conference calls. There was a Botox provider saying that Botox is going to go up because you need, like I told you before, the saggy face thing, if you lose the weight, that every company on their earnings call is talking about the Ozempic risk, et cetera. I'm like, is that real, or is it like the AI thing? You just say it on your conference call, and all of a sudden your stock goes up or down. He said it was actually real.
That's what this story says. Ozempic maker Novo gets calls from scared food CEOs.
Yeah,
John was
that's what he
reporting.
said.
I don't know, but what I can tell you.
And he wouldn't name names.
Of course he wouldn't name names.
Oh, come on.
But and everyone kind of laughed in the room, and he kind of laughed, and then he's like, yeah, because no one actually knows how this is going to play out. He's like, I can't even tell the CEOs how this is going to change. He did say some pretty interesting things that if you look over time, you have to stay on these drugs in order for the benefit to
Is
be
it like
continuous.
one injection a week?
I don't know if it's a week or a month, but the point is you can't go off it.
Right.
That as of now,
or if you do go off it, you risk gaining the weight again.
Ready to gain the weight again,
Okay.
right? But he was saying that if you look at obesity as disease, hopefully if you use this long enough, your brain can be retrained to think about your weight differently. So if you're obese, your constant state weight is obese. So your body will always revert back to that. And he's hoping that over time, the brain will reconfigure that and that your actual weight, normal weight will be lower. That then obviously could have a big impact.
Do the insurance companies cover? Does my company's insurance cover it?
Not yet.
Okay.
But Medicare, but you could get there, and that's what they're spending all their time doing. Like, it's not just about obesity; it's about all the other things. Like, if you treat obesity, then you won't have all these issues like knee replacements and a heart attack and some brain issues, which will then prevent you having to spend money later on. It's really cool.
Yeah, and but the issue right now simply is supply. There's not enough supply.
Not enough supply.
You can't get it. Even if you get the script, you can't get it. So that's a big issue. So it's been maybe this is kind of like the AI of 2024.
100%.
Maybe the story. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we got a lot happening. We're going to kick it off with the ARM CEO, Renee Haas, is going to be speaking with Bloomberg Technology host Ed Ludlow and Caroline Hyde. That's coming up in just moments. So that's going to be really amazing. Stocks up like 60% today. So we'll get to the bottom of that. Let's kick things off this hour with Mr. John Tucker.
All right, quick market check here, being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Traders seem to be taking a bit of applause. S&P 500 did close at another record yesterday. It's just shy of hitting the 5,000 mark, but up, well, right now, dead flat, 49.95, so 5 points away. Disney hitting a one-year high, reporting adjusted first-quarter earnings that beat expectations. They delivered a full-year profit forecast that is seen as strong. Shares of Disney right now, 10% higher. Paul, as you mentioned, after their report, ARM shares, 58% higher. Overall, the S&P 500, again, dead flat. The Dow down 71 points. The NASDAQ 100 up 46. We check the markets all the time right here on Bloomberg Radio. I'm John Tucker, Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over to YouTube and check that out.
Steele, by the way.
What's that?
Steele.
He called me Smith, right?
Did I say
Was
Smith?
it Smith?
Yeah, I heard
Is that
Smith.
that's a quarterback, Alex Smith?
I mean, it's so easy to get us confused.
It's
Me
just-
and quarterbacks, because we're so close.
point that out.
Exactly. It was like a quarterback who played like not now, like years ago.
Right.
So anyway, I'm just looking at this.
I didn't know if I was crazy, but I'm glad I wasn't crazy in that moment.
ARM, stock's up 58% today.
Unbelievable.
I mean, so this, it's just amazing. So we're going to have this thing, they did their IPO in September 23 at $51. So it's had a heck of a run here. So we're going to have some very interesting conversation coming up. Ed Ludlow, Caroline Hyde, Bloomberg Technology. They're going to have the CEO of ARM, Renee Haas, talking about the quarter, talking about the future of this company. Is it, how much of an AI play is this? How much is that driving the business? So right now, let's go to Ed Ludlow and Caroline Hyde.
Bloomberg TV and radio audiences. ARM shares more than 50% higher. The bullish outlook is something we can now discuss with the CEO, Renee Haas, joining us. And Renee, you must feel vindication. You were trying to tell this story at the IPO, and boom, you deliver.
Well, thank you, Carolyn. Yes, we're really happy with the results that we posted. Additionally, very, very good feelings about the forecast going forward. But as you said, this is really the results of strategies that were put in place a number of years ago that are now just really starting to come to fruition.
Yeah. When we think about the vindication, when we think, though, still about basically more of your technology going into more types of equipment, you've managed to see a diversification out of phones. Paint us the strategy of ARM going forwards, because many would say, actually, you're not just, well, the overall designer of chips, you're basically making the chips. You're fabless in some way. How do you see that relationship going forward with Qualcomm, for example?
Well, a lot of folks, as you said, didn't really understand the company well and where we fit. And obviously, we had a lot of growth attached to the smartphone market. But ARM is in a lot of devices that people may not naturally think about. We're in a Tesla vehicle. We're in a Ford F-150. We're in a Ring smart camera. We're in a Samsung TV, a Samsung smart appliance. So just about every device you can think of has ARM inside, and just about every device you can think of needs more and more compute, particularly as AI is now driving a whole new demand cycle.
Talk to us about AI. Jeffrey is really singling that out, the analyst there, saying that this really shows you're a beneficiary from AI. But where does the AI focus come? You, of course, were at NVIDIA before. They are all about AI accelerators. And I'm interested as to whether or not that would be an area that you get into other than servers.
Well, right now, NVIDIA is a great partner. Their Grace Hopper chip, the super chip, uses a lot of ARM CPUs in combination with their GPU, which is a really, really great solution for high-end AI training in the data center, as well as inference. But when you start moving to smaller devices, say smartphones or PCs, well, AI is going to run there too. If you look at some of the recent announcements by Samsung and Google relative to their smartphones, there's a lot of things such as circling an image on a browser and then having that browser go off and do search based on the circle. That's AI. That's actually running in a smartphone. And what we're seeing is really a drive for more and more compute capacity to run these AI algorithms, some that people don't even know what they are yet. But what designers want to do and need to do is future-proof their designs with more and more compute. And that is really driving a strong licensing cycle for us in terms of more demand.
Rene, we've been at pains to kind of help the audience explain how your business works. You know, the royalty side, I call it the building blocks of chip design, and then the licensing side, managing the interaction between the underlying design of the chip and the software it's intended to interact with. And what you said to the street is, smartphone isn't everything anymore. It's a third of our business, but somehow you're also boosting the royalties that are coming in on that business. Just explain how that dynamic is working. Smaller proportion of overall, but you're basically making more money per deal.
We've got two things kind of going on in the smartphone market. One is we've moved to a higher version of our processor, what we call version 9. And the royalties associated with version 9 are roughly double than that of version 8, and that's growing. Last quarter, about 10% of our royalties came from version 8. Now it's version 9, it's about 15% and growing. So that's happening. But secondarily, people are putting more V9 in their smartphones than they put V8. What does that mean? Well, it means more processors to handle these complex tasks such as AI. So what you have is a compounding effect. Increased rates from the new version, but more and more compute because more and more compute's needed to run these complex devices. So it's having a real growth effect for us.
Rene, what happened in China was a surprise. How long does that continue for?
You know, China follows the rest of the world for us, Ed, in the sense that where we're very strong in the rest of the world vis-a-vis data centers or EVs, China follows that. And the reason is that the software ecosystem, which is global, that is really predominantly ARM-based, China partners want to leverage that. And one thing that China is very unique about is speed. They want to go as fast as possible, develop products as quickly as possible. Well, the software base allows them to develop products very quickly that the market will adopt. So, you know, there's been a lot written about China headwinds in the market, et cetera, et cetera. But for us, China has been a great market.
For our Bloomberg television and radio audience, we're speaking to the ARM CEO, Rene Haas. Overnight, Rene, SoftBank, which hold 90% of your company, said that they're going to put you at the center of their AI strategy. How much say are you going to have in that if SoftBank is kind of dictating how they see your role in the play out of AI infrastructure?
Well, I can speak from kind of two hats. One is as the CEO of ARM, and the other is as a SoftBank board member. I'll speak to the former primarily here. We believe that AI is the most profound opportunity in our lifetimes, and we are only at the beginning. When you think about artificial general intelligence and what is required to make that happen in terms of compute, power efficiency, energy, those are all great areas for us to be involved in and focus in. So I think AI is not in any way, shape, or form a hype cycle. I think we're in incredibly early days, and I think it's going to have amazing impact on our planet.
I mean, extraordinary. We're still just looking at your share price now rocketing up to about 60% on the day, up more than 70% over the last 5 days. Are there any areas of concern for you? You were just talking about the macro picture, for example, being in China that actually has played to your strengths, even though the rest of the economy we slightly worry about, China's still a bright spot. What about geopolitics? What about the international role that you have as ARM?
Yeah, it's a great question. You know, I think for CEOs, particularly now in the semiconductor world, the geopolitics, government relations, things of the nature, 5-10 years ago, that wasn't something that we had to worry about a lot. Now it's obviously front and center in terms of how we think about the world. I think for ARM, I don't know that our issues or concerns are any different than my peer group faces. We all ship globally. We think the world is a better place when it's an easier global ecosystem, but we're also mindful that we are in very different times than we were 5-10 years ago.
Renee, a question from our audience on social media for you. Will you start doing business directly with the software ecosystem in the context of AI edge computing? That's what they want to know.
We do a lot of business with the software ecosystem in the sense of that they're incredibly strong partners to us. When you think about Android as a software ecosystem, when you think about Windows, when you think about everything going on with open source software, that is something we are incredibly involved in, particularly from a technology side, because at the end of the day, what makes ARM so pervasive, it's a software ecosystem like no other. So software is front and center of what we think about in terms of all of our engineering engagements.
ARM CEO Rene Haas, stock soaring. Great to have some time with you. Thank you so much.
All right, very good. That was ARM CEO Rene Haas speaking with Bloomberg's technology hosts Ed Ludlow and Caroline Hyde. Again, a great quarter. Stock
really.
Ripping here. So it's they're not just a chip company for telephones. They're into a lot of other stuff, including AI. And again, Masa-san over at SoftBank saying, ARM is my AI play.
Yeah.
So I guess
he needed a win. Yeah. And the CEO saying, no surprise, the AI is not in any way a hype cycle.
Yes.
I mean, I get that.
Yeah.
It's still an implementation, and who benefits and all of that still has to be sussed out in the right kind of way, I think.
Yep. So I think what most investors are doing for their AI trade is just buying some of the big technology plays and saying, I'm going to catch it that way, in addition to NVIDIA and maybe some other specific names. All right, let's switch gears a little bit and get back to a little bit of Fed speak. We had some economic data today with the jobless claims, kind of right in line with expectations. I don't know. I kind of feel like this Fed obviously has taken March off the table for a cut. And I don't know where we are for May, maybe 50-50. I don't know what the warp thing Majiggy says, but let's talk to somebody who actually does this for a living. That would be one Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. He is down in the Bloomberg campus getting ready for what will be a spectacular lunch, I'm sure, because that's how they do it down there in Princeton.
Right. Let's just talk about that.
Yeah, I know. I mean, just it's unbelievable. They did a renovation, which I don't even know why they did a renovation because it was already a great facility, but it's even better now. All right, Ira, talk to us about May. I'll give you March. We're not going to do anything in March. That's fine. But I'm focusing now on May. I could argue that they don't need to do anything in May. What do you think?
Yeah, and there certainly are people who are arguing that very thing. When you look at the recent data, it does seem like the economy is not slowing down very much. You have some signals that maybe inflation will kind of stabilize here instead of continuing to fall. So that's leading some people to think that the Federal Reserve might not cut in May. So we are pricing, like you said, using the WIRP function around a 3/4 chance of a cut in May, and I think that that's probably the correct pricing given the information that we currently have. I think the thing that we have to remember though is that the Federal Reserve doesn't want the difference between inflation and the Fed funds rate to get too wide because they think that will tighten financial conditions too much and slow the economy more. Now, how effective is monetary policy right now, and what is the lead and lags of monetary policy right now? No one really knows, and it's certainly much longer this time, I think, because of some of the structural changes, like everyone with low mortgage rates that don't have to refinance again and won't when interest rates are 400 basis points above where their mortgages are.
That would be me. So fair enough, Ira. And you had Thomas Barkin talking to Michael McKee earlier, saying that it is conceivable that the neutral rate has risen after the pandemic. So it feels like the thing that kind of throws some cold water is that if you have a higher neutral rate, then we're just less tight than we thought. Therefore, we can wait longer to cut, or you don't have to cut as much.
Sure, and the neutral rate almost certainly is higher, right? The question is how much higher. We had a time period in between the the crises, both from 2009, call it, to 2020, to the pandemic, where R star, the real neutral rate, whatever you want to call it, was probably exceptionally low. And one of the big reasons for that was just the lack of volatility in the economy, also lack of volatility in some markets. Although obviously markets went up and down, but generally speaking, you had a situation where you had exceptionally low R star. So R star is higher, right? I mean, there's almost people who are saying that it's not. I think aren't considering that we're in a different regime now than we were the last 10 years. I think the question is it higher like it was in 2005 or 1995 or 1980? And I suspect that yes, R star is higher than it was the last decade or so, but we're not going back to the 1980s when the real neutral rate was probably somewhere closer to 8 or 9%. So we're not there, but we're also not at 50 basis points. We're at 1.5% or 2%, something like that is our estimate of where R star is.
So if I go to the Morgan Stanley fixed income trading floor and go over to the government desk, I got a feeling the traders there are just kind of scrolling through TikTok. There's not a lot going on. It feels like it's a trade range bound kind of trading range. Is that right, Ira? And what maybe gets us out of that?
Yeah, we've been in a range. I think we'll probably stay into a range at least until next week when we get CPI and retail sales. I don't see really what would knock us out of this. So it's not unusual for 10-year longer term Treasury yields to fall into some 30 to 50 basis point range. Call it 40 basis point range right now that we're in, and just chop around within that until you get some impetus that's usually fundamentally driven that drives the market out of those ranges. And sometimes those ranges last for months and months at a time. There was I remember going back to 2015 when we were in the same range for about 6 months, and I was thinking about switching careers because there was nothing to write about. So I don't think we're going there, right? I think that we'll get some more information over at least the next 6 weeks that gives us a better direction, and maybe that direction. And I think that this is something that is permeating some of the trading desks is, hey, what happens if the Fed doesn't cut as much as the market's pricing? What happens if the Fed only cuts 2 or 3 times? In fact, we have a model that you can find out. You go to BICO models, and we have we look at the options market on some interest rate futures contracts, and what we say is that the market's pricing for a 20% chance that the Fed only cuts once or twice this year, and that's something that we have to keep in mind. That's a real possibility now, and if we continue to have such good data, I think it becomes a higher and higher probability as the year goes on.
That's really interesting. I wonder what would happen in the markets in that case. Like,
equities may,
equities may like it okay if the growth is really there, but the bond market, I don't know. I think that would be a real sea change. We've already come in from like 6 or 7 to 4. Real quick, 20 seconds. 30-year today. Do you care?
Yeah, well, yesterday's 10-year auction went very well, so I am a little bit concerned about the 30-year today, because what we've seen sometimes is one auction does well, the next auction does poorly, or vice versa.
Fair enough.
How come there's a Treasury auction today?
Because I know.
She pays attention to stuff.
To be totally fair,
she pays attention in class.
Bloomberg Daybreak is really helpful with these things.
Well,
so
also I said it in
if you get
every
after
market update.
No one listens to John Tucker, but if you read it Bloomberg Daybreak after 5:30 a.m., they have really concise bits, not long stories, really bite-sized information for you. And then I cut and paste, put them on my notes, put them on my thing.
Look at you. Ira Jersey, thank you so much.
I sound more organized than I
Bloomberg
actually
Intelligence Senior Rate Strategist. Thank you so much for joining us and learning. I mean, this is how she gets so smart. See, but the key thing is if you get in after it's 5:30. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This is Bloomberg Business Flash. We're in kind of a holding pattern, at least as far as the S&P 500 goes. We are just about 8 points away from topping 5,000 after yesterday's record close for the index. Focus on earnings. They include ARM Holdings. We just saw the CEO. The share's up 59%. The chip designer's third quarter results surging past expectations. So that's going to let the company boost its full year forecast. PayPal Holdings, the worst performing stock of the NASDAQ and the S&P 500 right now. And applications for unemployment benefits. Ira Jersey just talking about that. That was some of the economic news that we got today. That fell for the first time in 3 weeks. So it does suggest that employers still largely are holding on to workers at this point. S&P 500, 3 points lower, 49.91 on the index right now. The Dow Jones Industrial Average down 118 points, and the NASDAQ 100, that's up of 49 points, a rise of 0.3%. In advance of the 30-year bond auction. Did you hear that, everybody? There is a bond auction today, and it's the 30-year. 5 basis points higher right now at 437. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Radio, and that's where you'll find us. We've been talking a lot about Las Vegas, the Super Bowl there, what it means for the casinos and the hotels and just the tourism business in general. It means a lot for their balance sheets as well, because a lot of these companies rely upon a fair amount of debt in their capital structure. That's why covering these industries like the casino industry, like the cruise business, like the hotel business, following them from a credit perspective is critically important. And we've got that at Bloomberg Intelligence. Jody Laurie joins us. She's a credit analyst, and she covers all those fun industries. Hey, Jody, I want to talk to you about, first of all, one of my favorite companies, Wynn. I love their properties. I love Steve Wynn. He's just a visionary, which is interesting to say because he's mostly blind, but he is a visionary. Talk to us about Wynn, their balance sheet. How's it doing these days? How's business?
Sure. So I think that is a great question, Paul. And from a credit analyst perspective, first I want to couch this with, we're a little bit uncomfortable recently because many of the companies that we cover have been a little bit optimistic. And as a credit analyst, you never want to hear optimism, right? So it's taking some getting used to. I would say that Wynn's call yesterday was had a tone of optimism, and it was a good thing for the creditors too, because today they came out with an add-on to their 2031 bonds, meaning they're adding an additional $400 million to those bonds to repay 2025 bonds outstanding. And they're also simplifying their capital structure by doing that. And so, not to get into too much of the technicals around it, they're really solving for the fact that they have near maturing debt. They have quite a bit of near maturing debt. On the U.S. side, it's $1.4 billion in 2025, and they're already hacking at that by cutting it down with both cash as well as proceeds from that new issue.
Can I ask the weird question? Why is it bad if a company sounds positive and you're a credit analyst?
It's not bad. It's just, when you're a credit analyst, you're constantly looking for the what's next, what's the boogeyman over the shoulder.
I gotcha.
And so when you hear companies just talk so positively, I mean, it's great to hear it in management's voice. There's a difference between management telling you they're optimistic and showing you they're optimistic. I think that's sort of the finer point. And what was interesting about Wynn is that that's been a name that's been lagging its peers in terms of its turnaround story. And with Macau's reopening a year ago, it's finally started to get its groove back, both in terms of what they've been doing in Macau, but also what has been going on in Las Vegas.
So how is their business overall? Because Wynn does have a different business. They have a mix of Macau and Vegas, but I guess they're much more leveraged to Asia. Is that right?
That's correct. I mean, when you look at Asia, you look at how much they have from an EBITDA perspective, I mean, it is quite a sizable chunk of their EBITDA. You're talking Macau EBITDA was somewhere between 3/4 of how much they were generating pre-pandemic. And so it was a big whack to their operations when Macau shut down. Now that the quote unquote floodgates opened a year ago, we are seeing that come back, and we're seeing that come back quickly, both for Wynn as well as for Las Vegas Sands, as well as for MGM.
I should point out, though, that part of the optimism must be like the next 5 days. So you have the Super Bowl, but you also have the Chinese Lunar New Year, Year of the Dragon.
Yes.
So I'm told, yeah.
Yep.
So that's going to be really great for a company like Wynn that is like perfectly exposed to both of these two things.
Absolutely, Alex. You are hitting the nail on the head. So Brian Egger, my equity counterpart, has written a lot about the Super Bowl, and rightfully so, because it's the premier event in Vegas right now, coming off of the F1 event. And a lot of the discussion was around that momentum, right? So yeah, F1 is the, Formula One racing. And so now you have these premier events coming to Las Vegas and bringing in people. But something that Wynn also discussed that is helping it is its proximity to the Sphere. And we actually, I went to the Sphere when I was in Vegas in October, and so I was among the first few who got to see you two. It was fantastic. And they like to, yeah, they like to advertise the fact that they are, from how the crow flies, they are the closest to the Sphere. That said, I can vouch, because I actually had this issue. I was trying to get to Wynn, and I tried to cut through the Sphere, and in fact, you cannot easily get from one to the other unless you're staff. That said, it is still very close, and you still get a great view. It's also the type of customer that is being brought to Vegas that I think is really changing their model, particularly for, when people are coming to see U2, when people are coming for these big events, whether it be the Super Bowl or Formula One, the type of customer is changing. And I think that's been a real sort of tailwind for Wynn as well as for some of the other companies.
Yeah, I'm just looking at the FA function for Wynn. 2019, they had $1.8 billion of EBITDA in 2019. Then 2020, minus $300 million. 2021, 836 million. Then 725 million. And this year, 2023 last year, 2.1 billion. So it took them, kind of 4 years to kind of get back to where they were pre-pandemic. So there's an industry that was really hit hard both in Asia and Vegas. But it seems like they're back, baby. How about the cruise business? Another one of the businesses I like. From what I hear talking to people like you and hearing the CEOs of these cruise companies, they're still looking very strong from a revenue standpoint.
Paul, I mean, it's another area that is just showing momentum over and over again. For the cruise companies, just to sort of mention, Royal Caribbean today got upgraded by 2 notches. So they're one step below investment grade by S&P, not by Moody's, but by S&P. And that is a tremendous feat for them, because you think about the cruise lines a few years ago and they were written off for dead. Now we have Royal Caribbean getting to the cusp of investment grade. You have Carnival saying they want to be investment grade and really working towards it. And not only is it a case of they want to get there, but they're also seeing the bookings, which are, that's a way for them to generate cash. That's not the debt markets, right? Is people are booking cruises, they get that as deferred revenue, which is also a cash item. And so they have all of this cash coming through as people are booking. They have most of their 2024 booked. I mean, Royal Caribbean talks about Icon of the Seas, which I know you and I talked about last time we talked, and they said that they're almost completely booked for 2024. It's just the response that they're getting this year has been tremendous, and they're going to ride that for as long as they can. That said, something that we found most interesting is when we did our U.S. travel survey a few weeks ago, we found that the Caribbean and Mexico are the most sought out areas by the vacationers that responded to our survey in terms of international locations. And what does that mean for the cruise lines? Well, for cruise lines, for all-inclusives, those are prime spots for people to go. And so it just adds to that story of that demand for cruising, that demand for what consumers want right now.
As always, when Jody's on, I'm like, 2 questions. one, why does she get this job? I want that job.
I know.
Even if I was an analyst and covered oil companies, I'd be going to rigs. Like,
Nope.
Offshore rigs, this would be nothing. My second question, and we only have about, a minute left, but for these guys, do they want, and for all of them, do they want the premium people or do they want volume?
So Alex, first to mention your first question, I have in the past covered energy companies as well, and it is fun in a different light. You don't get that same luxury item. But in terms of, and now because of that, I forgot your second question.
Premium passengers versus just volume.
Premium passengers, correct. Okay. So they are talking about both the new and return cruisers because they want both, right? So Carnival told us that it's something like 45% of cruisers are return cruisers, and they're dedicated to both, there's a certain percentage that's really dedicated to both the brand as well as cruising in general. They want, of course, those new to cruisers, though, because eventually they hope to bring them in as return cruisers. That said, what they really want and what they've been seeing, what Royal's been pushing, what Carnival's been pushing as well, has been people spending on experiences before they even cruise. By that we mean you're not just booking to go on the cruise, you're booking to do the snorkeling, you're booking to do that tour around the island that you're going to.
Yeah, that's what.
By the time. Right.
I think that's what I would do. I'd be big on that. So I think once I do go cruising, which may be a calendar 25 event for the first cruise, I'm going to be a very profitable cruiser for them. Jody Laurie, thanks so much for joining us. Credit analyst covering all the fun stuff. Let's just put it that way. Let's head down to Washington, D.C. Amy Morris has got world and national news for us.
All right, thank you, Paul. The most consequential election case since Bush v. Gore underway right now at the Supreme Court. Lawyers for former President Trump are arguing the Colorado Supreme Court was wrong to remove him from the ballot under the 14th Amendment's insurrection clause, also known as Section 3.
President Trump is not covered by Section 3 because the president is not an officer of the United States, as that term is used throughout the Constitution.
Trump attorney Jonathan Mitchell. The justice is now questioning attorney Jason Murray. He represents voters who sued to keep Trump off the primary ballot. Ukraine President Vladimir Zelensky says it's time for a renewal in Ukraine's armed forces in a post on X. Zelensky says General Valery Zaluzhny is to remain part of the team, but will no longer be Ukraine's army chief. Senate Republicans delivered a death blow to efforts to secure the border with Mexico. They blocked that bipartisan compromise after Trump denounced the deal. Independent Senator Kyrsten Sinema worked with her colleagues on the bipartisan deal, called them out for their hypocrisy.
It turns out border security is not actually a risk to our national security. It's just a talking point for the election.
That's Senator Kyrsten Sinema. Democrats in the Senate say they're going to try again today, but without the border provisions. German Chancellor Olaf Scholz is in Washington with a focus on maintaining support for Ukraine. Bloomberg Government's Jack Fitzpatrick reports President Biden is also sounding more strident on the issue.
He did bring this up, very much emphasizing that Russian President Vladimir Putin is waiting to see if the U.S. steps back from its support for Ukraine. And at this point in Congress, that is the turning point. That is the operative question facing lawmakers.
Bloomberg Government's Jack Fitzpatrick reports Chancellor Scholz will meet with members of Congress today and President Biden at the White House tomorrow. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 was fading just a bit as it approaches 5,000. You have 7 of the 11 major industry groups lower right now. The biggest drag, that is coming from utilities and energy, the best performing industry group. The parade of earnings continues. Walt Disney, ARM Holdings jumping on their upbeat outlooks. Disney shares 12% higher. ARM up 54% right now. And on the other side, you had PayPal Holdings sinking on an underwhelming forecast. Shares of PayPal right now 11.5% lower. Well, as for rates, Joe Davis, chief economist at the Vanguard Group, says the case for aggressive rate cuts from the Federal Reserve has now diminished.
The economy still continues to defy gravity, right? You're seeing it in corporate earnings, still pretty strong. Labor market has cooled, but it's still tight. And so I'm glad to see them introducing patience into the market narrative.
Right now, the S&P 500, 3 points lower, 49.92 on the index. Dow Jones Industrial Average, 104 points lower. That's down 0.3%. The NASDAQ 100 is higher, up 47 points right now. That is up 0.3%. And ahead of today's auction, the 30-year yield 4 basis points higher at 436.
I heard you, John Tucker.
All right.
I see you and I hear you.
There's an auction today, the long bond. We can check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
You are listening to Bloomberg Intelligence Podcast. No, we're not a podcast. We're live on radio, the Interactive Broker Studio. You can also check us on YouTube as well. Here's one of the top read stories on the terminal right now. Greenlight Capital forced to shift its strategy as the growth of passive investing and algorithmic trading transformed the markets. Quite a statement from David Einhorn. He spoke to Barry Ritholtz, who is the host of Masters in Business on Bloomberg Radio. Here's part of that conversation.
I view the markets as fundamentally broken. Like the number
fundamentally broken. That's a big statement.
Yeah, there's value is just not a consideration for most investment money that's out there. There's all the machine money and algorithmic money, which doesn't have an opinion about value. It has an opinion about price. Like, what is the price going to be in 15 minutes? And I want to be ahead of that. Or zero-day options. What is the price of the S&P or whatever stock you're doing for today? What's it going to be in the next half hour, 2 hours, 3 hours? Those are opinions about price. Those are not opinions about value. Passive investors have no opinion about value. They're going to assume everybody else has done the work. Right. And then you have all of what's left of active management, and so much of it, the value industry has gotten completely annihilated.
That was David Einhorn speaking to Barry Ritholtz, who is the host of Masters in Business podcast. You can definitely listen to the whole interview on that podcast. Barry joins us now in the studio. Barry, what was your takeaway from the interview? I mean, you could argue, obviously, he's talking his book, but today is a beautiful case in point of like nearing 5,000 on a couple big tech stocks, and that's it.
So there were a couple of big takeaways. You know, we didn't talk about what he said surrounding the SEC no longer really enforcing things. Yeah, they'll enforce a little bit of insider trading rules, but there's an absence there, according to Einhorn. To me, what's really fascinating about him is here's a guy who had a spectacular start to his career. First 15 years put up incredible numbers, famously shorted Allied Capital, famously shorted Lehman Brothers right before they went bankrupt, and then hit a rough stretch in the 2010s. Normally, that's where a story would end. But what makes Einhorn such a fascinating investor and analyst, and he was very proud to describe himself as an analyst, is they rethought their strategy. They looked at what's changed in the structure of the market and said, we can no longer do basic superficial value investing and hope the market catches up. We have to change our metrics. We have to change our approach. And for the past 5 years, they've been putting up really good numbers. The shift has worked.
What did they change? What did they change to, I guess?
So what their belief and their strategy used to be is find stocks that the market doesn't recognize the value, what he described as variant perception,
buy them and wait for the market to figure it out.
Okay.
Hey, you know, we buy stocks if the PE of the market is 16, we can find stocks with a PE of 12, and eventually everybody will come to our party. He said, as value investors have seen outflows, as value funds have gone out of business, you can't rely on that sector to do that. So now we have to find deep value stocks that are taking matters into their own hands. What do you mean by that? Well, cheap companies that have enough growth and enough cash flow to do big increases in dividends, big increases in share buybacks, and even if the rest of the market doesn't figure out, their own business model will allow their stock price to grow by returning capital to shareholders through buybacks and dividends.
As that gets harder, though, isn't everybody looking for exactly the same thing in a smaller pool of candidates?
You know, back when I was on a trading desk in the 1990s, in the medieval times, there were thousands and thousands of sell-side analysts, and everybody was looking for those sort of stocks. And there's something to be said for the shift, and I think he got this right, algorithmic trading, quantitative analysis, and passive investing has eliminated a huge number of those analysts. Then you take, you know, the Wilshire 5000 is 3,400 stocks. There aren't as many stocks as there once were. Anything that's small cap or micro cap is completely overlooked. And so the odd thing about price discovery and passive investing is it's created these inefficiencies where value is getting overlooked. If everybody is doing either growth or passive, it creates an opportunity for investors like Einhorn.
Do we know how much assets he has under management these days?
I think it's about $3 or $4 billion. I mean, it's off his peak.
Yep.
He went through a period in the mid-2010s, markets up 10, 12%. They're down 8, 10, 12%. Wow. They saw a bunch of outflows after really putting some big numbers up. In fact, since inception in 96, they've still outperformed the S&P by just about double. Maybe it's a touch light of that, but not on an annual basis, total, courtesy of compounding for 20 plus years. But there was the period in the 2010s where he spent nearly the whole decade not putting up great numbers, and it's only the past 5 years that Greenlight has begun to outperform again. And that's what this second act is very unusual in finance. Most people don't say, okay, I'm going to take everything I've done for the past 20 years, throw it out and start over. I give a lot of credit to him.
What's interesting, too, is that he mentions, you know, algos, et cetera, but also one of the top read articles also right now on the terminal is meme traders fueling an over 2,600% spike in a holographic tech firm, meaning that, like, we saw Gabe Plotkin getting taken out by a bunch of random guys sitting at home on a computer. Like, that must be very difficult, too, for him to sort of reckon with.
You know, the funny thing when you see that take place is you have to realize that even a huge 1,000% move in some of these meme stocks, they have to be supported by the fundamentals eventually. You know, markets will eventually...
Maybe Bed Bath & Beyond would disagree.
Right? well, but, you know, when we look at what happened with AMC, perfect example, they very intelligently said, hey, what's our stock price doing up here? Let's float some shares. Let's get some capital in. And they were able to very inexpensively clean up their balance sheet in a way that most companies don't get an option, don't get an opportunity to. So yeah, and if you look at all those meme stocks, they're all round trips. Every last one of them is, you know, they've run up 1,000%. They've given back 90% of those gains.
Go bankrupt.
Right. They've been, hey, by the way, if you want to buy a bankrupt company, then maybe you're not, before the bankruptcy filing, afterwards is a different conversation. Right. But before, maybe you're not a really good fundamental investor. You're just playing that trend. I think Einhorn, and we didn't talk about the meme stocks very much, but I think he would be intended to you know, short those.
All right, Barry, thanks a lot. Really appreciate it. Wonderful to get you in here. I have Barry Ritholtz joining us. You can download the Masters in Business podcast right now at Bloomberg.com or wherever you get your podcast. Catch the show every Saturday at 10 a.m. Wall Street time on Bloomberg Radio. Going to be a great conversation. I'm really looking forward to this one.
Yeah, absolutely. Hey, I don't know how he gets all these good guests. I think it's because he's a good interviewer and he's got a lot of people that download his podcast. So it's worth your time.
Let's do that. We're not
Okay.
going to do Jody's thing. Let's do Barry's thing.
Yeah, I know.
Okay. There's our plan B.
This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the stories we're following with the major companies, major shipping companies. Let's start there, warning that the security situation in the Red Sea is continuing to get worse. This comes despite the efforts by the West to limit attacks by the Houthi rebels in Yemen. The bosses of AP Møller Maersk and DS Norden say they feel the threat level is continuing to escalate in the region. This comes all after the Japanese shipping giant Mitsu OSK Line said the disruption on the route could last for at least a year. You have swaths of merchant fleets. They've been avoiding the waterway since the attacks by the Houthis began in mid-November. The area grew even more volatile after the U.S. and U.K. launched airstrikes in the middle of last month, so that prompted major owners in all sectors to avoid the region. A battered Chinese company that's developing holographic technology has captured the attention of the meme stock crowd. The prize, a 2,650% jump in their stock. Microcloud hologram soared as high as $41.53 today from a $1.50 record low earlier this week. More than $1.7 billion in shares traded. Posts about the stock pop up across platforms like Wall Street Bets and StockTwits. And according to the global leasing firm Ivans, Tesla's frequent price cuts are poison for the used electric car market, which is holding up better for manufacturers that handle discounting through dealers. Now, the fleet manager's CEO says having a list price that keeps going up and down is poison for residual values. Tesla, of course, spent much of 2023 slashing prices. And that is a look at some of your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
You are listening to Bloomberg Intelligence. I'm Alex Steele alongside Paul Sweeney. Let's get you right down now to Amy Morris for world and national news.
The Supreme Court is hearing its most consequential election case since Bush v. Gore.
Oh, looks like we're having a little bit of audio sound.
She's down in Washington. On January
There we
6,
go.
2021, Bloomberg Government's Jack Fitzpatrick with more from
I
Washington.
still got that echo. That sounds like it's the people behind the glass, I'm going to say. So they're working, pushing buttons. It's the mix minus, of course. That's what I was going to say.
Self-executing, or do you need another action from a court or from Congress to trigger it? They will face pretty fundamental questions that they have not had to face, especially for a presidential candidate and a former president, with regard to the constitutional clause barring anyone who is engaged in insurrection.
Bloomberg Government's Jack Fitzpatrick. At this point, the Supreme Court sounds broadly skeptical. Against an alleged criminal organization that attempted to overturn the result of Brazil's 2022 election. The Federal Communications Commission is outlawing robocalls containing voices generated by artificial intelligence. The decision sends a clear message that exploiting the technology to scam people and mislead voters won't be tolerated. Hazmat teams on the scene of a train derailment outside New York State's capital region. Rensselaer County Public Safety Director Jay Wilson says the train was not carrying any hazardous materials that could leak.
There is one car in the river which is carrying polypropylene. They're like a little pellet, a little plastic pellet. We don't think it unloaded a lot into the river.
The conductor team was not injured, and they're cooperating with investigators. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
All right, Amy Morris, thank you very much. We got there eventually.
Yeah,
a little bit of sound issue, but you know, we're going to deliver
Amy was
those
sounding
news
a little
for you.
funky down there.
Yeah, but Amy just plowed through.
Yeah,
it's good stuff. So let's talk about a little Taylor Swift, shall we?
Oh boy, I mean, here's some reporting out of Bloomberg. Taylor Swift. This is just the economics, because that's what we do here at Bloomberg. Taylor Swift resumes her Eras tour in Tokyo this week, with spending on tickets, merch, food, hotels, and other related activities on track to total an estimated $230 million. That's according to a lecturer at Tokyo City University. That would be a similar amount to what the Swifties generated in Denver, Colorado in July. So it's a thing everywhere. You know, I mean, she's just huge.
But and you know, we can kind of make fun of this if we need to, but like the point of it really is that if you go to the third quarter of last year, among some other things, the Eras tour was like really helpful for growth. Yeah, okay, it didn't really help inflation that much, but it really did help support growth. And the conversation I was having a few months ago was when Taylor Swift goes to Europe, for example, because growth there is much more anemic than here in the US, will she have the same kind of GDP boost? And does that actually wind up helping the economy not slip into any kind of recession, not feel more material weakness, and is that wind up supporting it? And I realize she's one person, but these are big numbers, and these are big names, and this could have, again, the big impact.
And I was seeing this reporting, Tokyo remains an attractive tour stop for many popular Western artists, welcoming Coldplay, Billy Joel, John Mayer, Bruno Mars, and Ed Sheeran in recent months. It's also a relatively affordable gig for fans, thanks to Japan's restrictions on resale prices. A standard ticket for the Eras concert cost 22,800 yen, the same price for a seat to see the Red Hot Chili Peppers play in May. So I'm not going to do the transition from yen into dollars. But
what about the merchandise? What about the new phone you have to buy to get the good pictures, with the better camera if you want to record it there? What about the hotel prices?
Yep.
Is there a cap on hotel prices? Because that really shot up in certain areas in the U.S.
Yeah, and you know, my daughter, she could not get tickets, 27 years old, could not get tickets in New York, took a train down to Philadelphia, got a hotel in Philadelphia, bought a meal or two in Philadelphia, train back. So, you know, probably all in $300 of just revenue for the city of Philadelphia.
I know someone who's going to Paris to see Taylor Swift.
Really?
Yeah.
That is very cool. That would be a fun
Just
trip.
saying.
Just saying. Yeah, Philadelphia's good, but Paris a little bit better.
Yeah.
Balance of power. That's coming up in just a moment. S&P 500 pretty much flat here. Same for the Dow. NASDAQ up 0.3%. Balance of power with Joe Matthew from Washington, D.C. That starts, you guessed it, right now.
of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Chuck Schumer tries Plan B. Welcome to the fastest show in politics as the Senate Majority Leader moves on a bill to fund Ukraine and Israel without the border attached. After the compromise went down in flames yesterday, we'll get the latest from Capitol Hill, talk to Bloomberg's Billy House. And as the Supreme Court today hears arguments on whether Donald Trump should be allowed on the ballot, we'll hear from Palm Beach County State Attorney Dave Ehrenberg with analysis today from Bloomberg Politics contributor Rick Davis. So let's get to it, as always, with a look at Wall Street. Here's Charlie Pellet.
Hi. Thank you very much, Joe Matthew. The number you need to know, 49.92 right now on the S&P 500 index, holding very close to S&P 5,000 right now, looking at a loss of 2 points. Little changed on the S&P, down 2 points now, down less than 0.1%. We have got the Dow Jones Industrial Average lower by 95, a decline there of just about 0.3%, while NASDAQ pushing higher, up 45 points, gain there of 0.3%. ARM, after holding, surging now by 55.3%. The Walt Disney Company, after earnings, rallying now by 12.4%. Federal Reserve Bank of Richmond President Thomas Barkin is reiterating that policymakers do have time to be patient about the timing of rate cuts, pointing to a strong labor market and continued disinflation. Barkin was interviewed this morning on Bloomberg Radio and Television.
I have said you don't have to be in any particular hurry. You've got a dual mandate with employment and inflation. And the employment side of the mandate, I mean, it's actually operating at historic levels, 3.7% unemployment, job gains. We talked about initial claims, job openings. It's a very strong labor market still. And so gratified to see inflation coming down, hoping it continues to come down. And I think we've got some time to be patient.
And you can hear more of the conversation with Tom Barkin on the Surveillance podcast. You can download it wherever you get your podcasts. 10-year yield, 4.15% with a 2-year, 4.44%. Gold, little change, down less than 0.2% right now, down $3.60 the ounce, 2031. Bitcoin up 1.9% now with a 45,000 handle, 45,028 on Bitcoin. Crude oil advancing again today, up another 2.8%, up 207 a barrel, 75.93. So again, recapping, we've got stocks trading mixed with the S&P lower by 2 points right now at 49.92, down less than 0.1%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thanks. Welcome to the Thursday edition of Bloomberg's Balance of Power as the Senate gets back together today to pick up the pieces from yesterday's flameout on the border deal. And we're joined live from Capitol Hill now by Billy House, Bloomberg News congressional reporter. Billy, give us a sense of where we are here. I know that Chuck Schumer's coming back around with a bill to fund Ukraine, Israel, Taiwan without the border component. Can it pass?
It looks very much like that itself will be blocked procedurally this afternoon. We don't know for sure, but the number of Republicans coming out one after another, Lindsey Graham, Rand Paul, others, kind of give us an indication that that's going to be blocked as well.
It's hard to tell what is motivating Republican lawmakers here after rejecting the border agreement that so much time went into. Now some GOP senators, I understand, are demanding immigration or border-related amendment votes on the 4 and 8 only bill. Could you explain?
Well, one thing you can say is that many of them, including House Republicans as well, have been demanding no Ukraine aid without some border security measures. And so what we have here is the Republicans didn't like this border security measures in the Senate bill. It was taken out. So now some of them are saying, well, wait, from the beginning, we've been saying you can't do one without the other, even though they objected to the version of the border security measures that were contained in that long-running negotiated Senate plan. So that's where we are. It's unclear. Different senators have different gripes from both parties. Some Democrats didn't like the deal either. And so now having to cobble together something quickly in a day or two just isn't going to happen.
See, Steve Daines, important chair of the NRSC, is urging members to block this package On the idea that it would send mixed signals, you vote for this, that means you didn't want to fix things on the border when you're running for re-election. Is that the nail in the coffin here?
Well, that's what he says. But what's also in play here is if you don't fix the border, those who blame the president, Biden, for inaction on the border get to continue claiming that throughout the election season, including perhaps his GOP rival, former President Trump.
Well, spending time with Billy House on Capitol Hill, is there a world, I realize you don't see this passing today, but if Ukraine gets through, maybe they do this separately, Billy, Israel, Ukraine, Taiwan. Is there a world in which Democrats end up getting everything they wanted and Republicans nothing?
No, that's just not going to happen unless we perhaps get a new Speaker of the House, because over in the House, of course, anything has to pass both chambers. There are a number of Republicans who just flat out say they aren't going to do Ukraine only, if Ukraine at all. So Johnson would have to rely on Democratic votes, and we know what happens to speakers a lot around here nowadays who rely on Democratic votes if they're a Republican speaker.
Well, so what is Speaker Johnson's goal here? Does he want to see, I know there was an attempt to pass a standalone Israel funding bill a couple of days ago. It failed. Does he want to see each of these come up for separate votes, or are they all DOA?
It's hard to tell what he wants or what he plans or what his strategy today is. That might have been a messaging vote. We don't know the intent, but there are complaints, and they run deep into the House Republican Conference, that he is insular, doesn't trust his own vote counters, indecisive, and even some top-level House Democrats have no clue what Mike Johnson's going to do from day to day.
Maybe I should have asked you, just substitute the name Donald Trump there. Is Donald Trump running the House, Billy?
Well, if he is, it's just as in much disarray as ever. But of course, Sunday, Speaker Mike Johnson reiterated that he's calling the shots, not Donald Trump, which, of course, what else would he say?
Donald Trump is, of course, in the news today here in Washington. Just lastly, and we're going to talk to Dave Ehrenberg about that in a moment, oral arguments before the Supreme Court. Billy, I understand that the ambassador, the Ukrainian ambassador to the U.S. is in town today. We're actually planning to meet up with her and talk with her later today on Balance of Power here on Bloomberg. Is she meeting with lawmakers or leadership to try to move the ball on Ukraine funding?
Oh, undoubtedly, but that is not something she hasn't been doing and dating from mid-year last year. So whether that serves to move the ball at all, it's not a real huge new type of development. Maybe what she has to say is different. Maybe there's some new information she has to provide, but her just simply meeting and urging lawmakers to act is certainly nothing new.
Well, he's waiting for something to move the ball. Billy House, when it does, he'll be reporting on it. Great to see you, Billy, and thank you. Bloomberg congressional reporter with us on Balance of Power. I'm Joe Matthew in Washington as we turn to our other top story here, and it brings us to the Supreme Court. Oral arguments now underway. A couple of hours now in Trump versus Anderson. This is the ballot access case, not to be confused with the one about presidential immunity. We're waiting to hear likely from the Supreme Court on that as well, but we haven't gotten that far yet. Today is about primary ballot access after he was removed from the ballot by the Colorado Supreme Court. This brings us back to December. This is a case involving the 14th Amendment, and it has to do with whether Donald Trump actually engaged in, and that's the appropriate term to use here, insurrection. Dave Ehrenberg's got his eyes on this from his perch in Florida. The Palm Beach County State Attorney is with us now. And Dave, it's great to see you. It's been a minute. I wonder if you can just first, before we analyze all of this, and we don't need to relitigate what happened on January 6th, I want to understand what are the questions that the justices are trying to ask here? Whether, in fact, beginning with the big one, whether, in fact, Donald Trump engaged in insurrection. How do you answer that question?
Well, Joe, good to be with you. As expected, the justices are largely avoiding that question. Instead, they're dealing with larger constitutional issues, such as, did the framers intend that states would go ahead and do this on their own, or would Congress have to pass a law? Is the 14th Amendment self-executing. And although I think in the end they will probably say that the 14th Amendment is self-executing, meaning you don't need Congress to make it happen, there is still Section 5 of the 14th Amendment, which says that Congress shall enforce this section. So what I think the court's going to do is they're going to punt, and they're going to say, hey, Congress, do your job, pass some uniform laws so we don't have 50 different states going in 50 different directions, because even the liberal justices were worried that Colorado, as one state, could decide the election for the whole country, and they didn't want mass chaos. So I think, to me, the only question I have is whether this will be a unanimous 9-0 opinion that overturns the Colorado Supreme Court case, or will it be 8-1 with Justice Sotomayor dissenting? Because it seems like even the liberal justices, with the exception of possibly Sotomayor, are going to go along with the majority, the conservatives, on this one.
Interesting. This is a pretty interesting moment for this court, and I know that at least the conventional wisdom is they want to be very careful here. Was the 14th Amendment really just about the Civil War, Dave? Because a lot of people seem to think so.
Well, it's about preventing insurrectionists from getting into power again. I mean, it was written in response to the Civil War, but then it was not meant just to pertain to that. This was meant to pertain to any traitors in government. They didn't want any future insurrectionists, any traitors to be elected to office, people who were in office at the time of an insurrection and then later tried to stay in office. They didn't want those folks. Now, one issue that Trump's lawyers are making is that they want him to be exempt from the 14th Amendment, because they like to say that the 14th Amendment, Section 3, does not include the president. So what they're trying to say is that the framers of the amendment were so worried about having insurrectionists lead the way in our government, except for being president. Like, they could be senators, they can be, they don't want them to be senators, they don't want them to be congressmen, but it's okay for an insurrectionist to be the president. That defies common sense. So I think that argument is a loser for Trump's side. I think ultimately, though, the Supreme Court's going to say, come on, we can't have 50 different states going in 50 different directions. This will be mass chaos. Let Congress establish some uniform set of rules here.
If the court, David, has to consider whether Donald Trump engaged in an insurrection, it also has to establish whether January 6th was an insurrection, right?
They don't actually have to go into whether Trump engaged in insurrection. That would be an embarrassing review, because, look, all the justices in Colorado, even the one trial court judge that ruled for Trump, all agree that he engaged in insurrection. This Supreme Court is not going to tackle that. They're going to avoid it, and they're just going to deal with constitutional issues. Because if they did deal with it, it would get really messy, and they don't have to. They don't like to get their hands dirty when they don't have to. One thing I must add, Joe, is that I'm a little disturbed that Justice Clarence Thomas not only is sitting on the bench for this case, despite what seems to me as having a conflict because his wife was part of the whole insurrection attempt, but he also asked the very first question from the bench. And so it just shows you why so many people have a low estimation of the high court.
Dick Durbin had called on him, the chair of the Judiciary Committee in the Senate, to do that very thing and recuse himself. By Monday, Dave Ehrenberg, Donald Trump is also expected, and it could come before then, to ask the Supreme Court to rule on this immunity claim. Where do you see that going?
Well, yeah, I think he's going to lose there. But the question is, how long will the Supreme Court take to act? Now, they could just accept the review or accept the petition and then deny the review. And hopefully that'll happen, because that will speed things up, and then we can get to the trial before the election. On the other hand, they could sit on it and they could review it, and they could make it impossible to try this case before the election. It's all in the hands of the Supreme Court. My best guess is that they don't want to wade into this one much either, especially because the D.C. Circuit Court of Appeals issued a very comprehensive, very strong opinion that I think the Supreme Court is just going to defer to. And when that happens, because I think it's a when, I think then it's game on in D.C., and Judge Chutkan is going to move forward with that trial for election interference, perhaps sometime in the late spring.
So what's the most likely scenario then, as you just outlined, the Supreme Court decides to not take up the case and just let it lie where it is in the appeals court, or they in fact uphold that ruling? Is there a difference?
Yes, one is whether they take it up, which is called certiorari or cert. Will they grant cert? You need 4 justices to grant cert out of the 9. I don't think they're going to grant it because of the strength of the lower court ruling, but they could. And then if they do, then there'll be a built-in stay, and then we wait for an opinion on the merits, and that would take a lot longer. So a lot depends, not necessarily how they will rule, because I don't think there's a chance in the world they're going to give a president absolute immunity like Trump is seeking. But Trump's strategy really is delay, delay, delay. And if they grant cert and they take a long time to review and make a decision, then Trump will win by losing.
Wow. Do you have timeline in mind? I know you must hate being asked that because nobody knows what the heck the Supreme Court's going to do. It can do whatever it wants. But will it be compelled to rule quickly on both of these, 14th Amendment and presidential immunity?
Yes, they see what's going on just like the rest of us. They know how important this is to get this done before the election, and I think they want to. I mean, Chief Justice Roberts cares so deeply about the legitimacy of the court. He wants people to buy into the court as an apolitical institution. But if they sit on their hands and delay this thing so that he cannot be tried until after the election, they will look very political. So I think the Chief Justice is going to make sure this happens sooner than later. And I do believe that the 2 cases, and only 2 cases, involving Trump that will be heard before the election will be the D.C. case in front of Judge Chutkan. I think that's the most powerful of the 2 cases. And then the second case, I think the New York case involving the Stormy Daniels hush money payments will be heard before the election. The other 2 criminal cases, the Mar-a-Lago documents case, which I do believe is the strongest of all the cases, that's got Judge Cannon, and she's slow walking that case. That's not going to be heard before the election. And the Fulton County case with all the issues with Bonnie Willis and conflicts and all the complex RICO issues, that's not going to be heard before the election either.
Amazing. I don't know how you do that off the top of your head still. Great insights from Dave Ehrenberg. David, let us know when you're back in the Capitol. Palm Beach County State Attorney with us here on Balance of Power. I'm Joe Matthew in Washington with a lot more straight ahead as we continue our coverage here from the nation's capital. So stay with us. Only on Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet, 1221 on Wall Street. We begin with the number you need to know, 49.92 on the S&P 500 index. We've got the S&P trading lower right now, with the S&P losing a little bit of steam after hitting records yesterday as traders await a $25 billion sale of treasuries that will test Wall Street's appetite for longer-term bonds after solid debt sales this week. So again, the S&P at 49.92, down now by 3 points, down by about 0.1%. Dow Industrials down 99, decline there of 0.3%. NASDAQ, the composite index, up 42, up 0.3%. NASDAQ 100 index also up 0.3%. And the Russell 2000 index, the outperformer today, small cap shares pushing higher, with the Russell 2000 up now by 0.9%. 10-year yield 4.15%, with a 2-year 4.44%. Spot gold down $3.50 the ounce to $20.31, drop there of 0.2%. While West Texas Intermediate crude up 2.7%, $75.85 a barrel on WTI. Apollo Global Management out with profit that beat Wall Street expectations as higher rates bolstered the alternative asset managers' growing credit and insurance businesses. Apollo right now up by about 1.8%. And Citigroup is weighing a move to cut 51 roles across its wealth business in London as the division's new chief looks for ways to boost the returns generated by the unit. Citigroup shares, they are trading lower now, looking at Citigroup down by 1.5%. Again, recapping, U.S. stocks are trading mixed. The Dow, the S&P, they're both lower. We've got NASDAQ higher. Spot gold, by the way, down 0.2%, $20.31 the ounce. I'm Charlie Pellet, and that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you. The next round appears to be underway here in the Senate. The next attempt to pass funding for Ukraine, for Israel, and Taiwan. And by that, I mean not the border. This is after the big compromise bill failed with spectacular fashion yesterday in the Senate. So Chuck Schumer's coming back around with a so-called clean bill, and we're joined now in our Washington bureau by Bloomberg Politics reporter and editor Mike Dorning. It's great to see you, Mike.
Great to be here.
Everybody wants to know what's going to happen next here. Considering the opposition we saw to the border compromise, though, does jettisoning that part of the legislation help the rest pass?
It may do it, actually. The question is whether they can get some sort of deal where enough Republicans feel like they're heard in the Senate that they can actually get 60 votes for it. There are a few votes short yesterday when they had a test on this. Schumer and the Republicans have been talking. We'll see where they are today. Mm-hmm. The big question is, if the Senate passes this, where it goes in the House.
Well, that's right. DOA is what we heard on the last one. Is it the same on this one, or has Speaker Johnson kept his cards a little bit closer?
He's kept his cards a little bit closer, and there are some ways, some rarely used ways, that they could bring this to a vote, even if Speaker Johnson decides not to allow it. That's very time-consuming, and they've only done that so-called discharge petition twice this century, but it could be done. Mm-hmm. All of this is going to be a lot slower, even if it works, than it would have been if everyone agreed on the border deal. And for sure, that border deal is dead.
Yeah, that massive, now dead bill failed to pass this procedural vote with only 4 Republicans voting in favor. That's not a lot. They would need to flip a couple of Republicans to make this pass.
Yeah, and once Donald Trump has spoken, you knew this border deal was dead. Yeah. He carries a lot of weight in the Republican Party, especially in the House. I mean, when he opposes something in the House, he has essentially a veto power over the House in most cases with the current majority there. So he can kill this off. It's dead.
Does Joe Biden end up making a return trip? I know he's got a State of the Union he's planning for, but before then, to try to push this across the line like he did with infrastructure or the IRA, Build Back Better. There was a time when that motorcade was going up on the Hill fairly often, it seemed like.
That was when the Democrats controlled the House, and the problem often were the progressive Democrats, that he could say, look, you just got to accept half a win here and go with this. I don't think that he really carries a lot of influence with the Republicans you need to get on board.
What does she make about Speaker Johnson's place in the universe right now? Marjorie Taylor Greene's holding a motion to vacate over his head, and we have a potential government shutdown. I know not a lot of people are talking about the budget, but that's only, 3 weeks away, the 1st of March. And he has vowed to not do another stopgap if that's required to keep the government open. With the debacle we saw, these 2 bills failing in the same day earlier this week, could he be in jeopardy?
He could be in jeopardy, but the thing that he has going for him is, who would his successor be? And he is a very loyal Trump person, and he's also a movement conservative who has a history predating his involvement in electoral politics of being committed to cultural conservative causes. So he has street cred with the right side of his caucus. He's loyal to Trump, and there's not a real successor. That doesn't mean he can't be toppled.
Sure.
But those are all things that weigh in his favor.
Well, I think it's fascinating that he's going up against Mitch McConnell with this apparent endorsement. I don't know if you saw this, of Matt Rosendale for the John Tester's Montana Senate seat. Mitch McConnell, the NRSC, the Senate Leadership Fund, they're all backing Tim Sheehy already. And then Mike Johnson shows up with this. Would that happen? Is this an intentional poke in the eye? Would that happen if Mitch McConnell weren't on his heels as he appears to be?
I think it's there's two things going on here. One, Mitch McConnell's on his heels, but the other is that Mike Johnson is on his heels, and he doesn't have that much power, and that is where the conservative Trumpist right wing of the party is. It's not for Tim Sheehy, it's for Rosendale.
Yes.
So he gets more credibility with them by supporting him in his primary. Mitch McConnell is, super focused on the Republicans gaining control of the Senate. So he's got his eye on those races.
Well, we'll see if these two find a time to get along, because they do have something in common, in that both have been really weakened, it seems, by Donald Trump over the past couple of weeks.
For sure. And, Mitch McConnell is kind of the last of the pillars of the old Republican Party, the old order in Washington. And that order is losing power in the Republican Party. And you really saw it in this border deal that had been assembled to address some of these concerns about the border that are not just in the Republican Party, but in large parts of the Democratic Party as well. But then that just fell apart as soon as Donald Trump, sort of the leading figure in the new Republican Party, had his say.
This is quite a time to be trying to make laws, that's for sure. And if you're just joining us, voting is underway now on this foreign aid bill, $95 billion. This is the one that strikes the border and includes Israel, Ukraine, and Taiwan. We got 45 yeses, 14 no's. You need 60, which is why this has been difficult here, Mike, and that'll tell us a lot, I guess, if they can move this thing. Your point, though, it may go nowhere in the House.
Or it may go slowly.
Or it could be dissected into parts. Something going in the other direction, though, is this tax bill, right? Is that going to see the light of day? It actually passed the House, but I know that there are Republican members, particularly on the Senate Finance Committee, who want to amend this, who want to mark it up, and that could slow it or kill it. Are we going to see this become law or see the light of day?
I think it's got a hard row to hoe. It's not impossible, but I think it was Chuck Grassley who said sort of the open thing, like, why are we giving a tax cut to America when Biden is up for re-election? Why not wait? So there's election year politics involved. They do not want to give this tax cut, particularly the child tax credit, in an election year. And there's also, everyone obviously on the Republican side would rather the bill be more Republican, but then they'd lose the Democrats.
So what's an experienced hand like Mike Dorney watching here for the rest of this month for indications on whether we have a shutdown, on whether the State of the Union has to be canceled, a real cataclysm of events here at the beginning of March?
Well, I don't foresee a reason why the Union would have to be canceled.
Well, if we shut down, I guess.
Yeah, you could still come up there, even if there's a shutdown, maybe for optics.
We can rent a generator for the lights.
I do think that Speaker Johnson and Mitch McConnell would prefer not to have a government shutdown if at all possible. They showed their cards on that before, that's their intention. And there's good political logic for not having a shutdown going into an election. It's just possible things could fall apart, but I think the probabilities weigh against that.
Well, if that's the case, he buys himself some time. I mean, we're halfway through the fiscal year practically. I guess not quite, but maybe there's a longer-term solution here that buys him a bit of flexibility to pass a CR and maybe write a budget or get a couple of mini buses here to actually fulfill the fiscal year so they can work on, what would it be, 2025?
Yeah, my guess, and this is just very common what they do in election years in Washington, is for that coming fiscal year that starts October 1st, just a few weeks before the election, they find some way to kick it down the road and not take hard decisions going into the election, but also not shut down the government. I think Johnson just has to worry about like the next battle. He's sort of governing the House like Donald Trump governed the country. And that is just like you get through the day, you get through the next battle. In Johnson's case, that's because he has a really tough job. It's a very slim majority in a fractious party. And, he's just new to that job. It's not like Pelosi when she was trying to run Democrats with a small majority, and Pelosi had years and years of experience and street cred everywhere.
And a relatively large majority.
Of 5 votes instead of 3 or whatever it is now.
Pay good money for that now. Mike, I'll let you get back to your reporting as this vote continues. We're at 50 yeses, 16 noes right now. Mike Dorning with us here from the Bloomberg newsroom in Washington. Let's get up to date on world and national news now. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. The Supreme Court did hear arguments today over whether former President Trump can be banned from the ballot in Colorado. That state's highest court ruled that Trump can be taken off the ballot under the 14th Amendment of the U.S. Constitution, and that's due to Trump's connection to the January 6th insurrection. In his opening remark to justices, Trump counsel, Jonathan Mitchell, said Trump cannot be banned because under Article 3 of the 14th Amendment, it references banning officers, not elected officials.
A ruling from this court that affirms the decision below would not only violate term limits, but take away the votes of potentially tens of millions of Americans.
Mitchell also argued Congress needs to pass legislation to enforce Section 3 of the 14th Amendment, but others say the clause is self-executing and requires no legislation. The Supreme Court's decision in this case will have huge ramifications across the country, particularly in states where there are still pending legal challenges seeking to remove Trump from the ballot. Well, the search is now over for the 5 Marines who were on board a helicopter that went down in mountainous terrain about 40 miles east of San Diego. Officials say all 5 died when the chopper went down. Efforts to recover their remains have begun, and an investigation is underway into the cause of the crash. The Marines were taking part in a training flight from Creech Air Force Base near Las Vegas when their chopper was reported missing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World headquarters, I'm Charlie Pellet. 1240 on Wall Street. We have got stocks trading mix, little change. That is the bottom line, with the S&P right now at 49.94, down by 1 point, coming off of a record. We've got the Dow down 61, a drop there of just about 0.2%. The Nasdaq Composite Index up 44, higher by 0.3%. But right now, the S&P 500 index just 7 points away from S&P 5,000. 10-year yield 4.15%, with a 2-year right now 4.44%. Gold lower by 0.1%, down $2.50 the ounce to $20.32, while crude oil is rallying 2.8%, $75.95 right now for WTI. Among the day's economic reports, jobless claims continue to suggest the American labor market is stable, even with recent layoff announcements in technology. And with that story, here's Bloomberg's Vinny Del Giudice.
In a surprise move, jobless claims dropped by 9,000 last week to 218,000. It's the first decline in 3 weeks and follows January's stronger than forecast payroll gain. Continuing claims, a proxy for the number of workers receiving unemployment benefits, also declined. Recent job cuts from Alphabet to Amazon could herald weaker numbers. Vinny Del Giudice, Bloomberg Radio.
Spirit Airlines is reporting a smaller fourth quarter loss than expected. It also says it does have the liquidity it needs to stand on its own. Spirit is fighting to preserve its acquisition by JetBlue Airways. Spirit shares today, which by the way uses the ticker SAVE. We've got Spirit up 1.5%. JetBlue trading lower by 1.3%. Again, recapping mixed market for U.S. stocks, keeping an eye on S&P 5,000. S&P right now at 49.92, a drop there of less than 0.1%. That's a Bloomberg Business Flash. Back we go to Washington once again. Here is your host of Balance of Power, Joe Matthew.
All right, Charlie, we thank you, and thanks for being with us here on Bloomberg Radio, on the satellite, and on YouTube. We've got eyes on the Senate floor today, where voting is underway as we speak on a cloture vote here on this standalone foreign aid bill. This follows the failure of the border deal to pass yesterday. Ukraine, Taiwan, Israel in the balance now, $95 billion. We're at 55 yes, 24 no. And we'll let you know and talk to Rick Davis about this once we have a sense of whether this is going to pass or not over the course of the broadcast. All the while, President Biden is leaving the bubble today, not going very far, just into Northern Virginia, beautiful Leesburg, where he's going to be speaking to the House Democratic Policy Retreat. And that's not exactly what we're going to be watching. Senior White House officials today, meanwhile, very quietly on their way to Michigan for an important series of meetings with Arab American leaders, where opposition, of course, in Michigan, as we've discussed, opposition to Joe Biden's Israel policy is impacting polls, weighing on his approval ratings, and could, in fact, mean the difference between winning or losing Michigan. This is where we start our conversation today with Rick Davis, Bloomberg Politics contributor and Republican strategist. Rick, this strategy is interesting to me. Arab leaders in Michigan had rejected an attempt by Joe Biden's campaign manager to meet last month. Apparently, they are going to sit down today. How much of a problem does he have there?
Yeah, I thought the indications when Julie Chavez Rodriguez, the campaign manager for the campaign, tried to meet with some leaders and basically folks just canceled or refused to meet, was a really bad indication. That was a clear indication that not only do they have a political problem, but they have a communications problem, because if the leaders aren't willing to talk to you, you're not likely to solve the issues. And so having now members of the administration, Samantha Powers, USAID, John Fines at the NSA, I mean, like, these are high-level administration officials meeting with Arab American leaders. That shows you that they've raised up the temperature gauge in the White House to the point where it's no longer a political issue, it's a presidential level issue. But it still smacks the same thing, which is, how do we get Arab Americans, especially in the vote-rich Dearborn, Michigan area, to come back on board, because that's a part of the Democratic base they cannot lose in Michigan and expect to win Michigan.
Well, we're seeing him lose Michigan in the Bloomberg Morning Consult poll, among other swing states, Rick. Is that where this decision is going to be decided?
Look, I mean, it's early polling, but it's been consistent, right? That President Trump has held a beyond the margin of error 5-point lead in the Bloomberg Morning Consult polls. What's interesting to me is that's at a time when Democratic Governor Gretchen Whitmer enjoys a substantial approval rating in the state. So there are some positive Democratic underpinnings that, Democratic leaders like the governor have the confidence of the voters of Michigan and needs to start to translate some of that over into the Biden administration. My guess is that we haven't really seen this campaign form yet in Michigan and the other 6 states that we're polling as swing states, with the Bloomberg poll. But it's getting late, and I think that you're seeing this kind of when the White House starts meeting with these community leaders in the Arab and also Muslim community,
Connection lost.
You know that this has now gone to the highest levels of importance within the White House. And maybe they can make some progress. I think the only progress they will ultimately make is if they can create, some kind of a more stable situation in Israel. And of course, that is out of their hands.
That's for sure, particularly when it comes to a ceasefire. Rick Davis, we've got our eyes on the Supreme Court today as well, hearing oral arguments today in Trump versus Anderson. This is the case, as we discussed earlier this hour with Dave Ehrenberg, about primary ballot access after Colorado's Supreme Court kicked Donald Trump off the ballot. Section 3, 14th Amendment. I'm not going to ask you how the court's going to decide because we have no idea, obviously, here, Rick. I just wonder how worried you are about a decisive ruling creating more division here in our politics and in this country.
Yeah, I mean, it's almost like either way the court rules, it's going to continue to expand that divide that you mentioned, Joe. Look, this court hasn't always been a rubber stamp for Donald Trump. And so I think a lot of court watchers I've talked to are kind of scratching their head wondering where this is ultimately going to come down because, they're not going to decide whether there was an insurrection. What they're going to decide is whether or not the standards applied by the Colorado court, can hold water, with the Supreme Court. And so it almost doesn't matter whether or not anybody can prove that Donald Trump was a part of an insurrection. So you see already in the reporting this morning that the Trump team are basically, starting this whole pitch by saying none of this constitutional law applies to the President of the United States, doesn't apply to Donald Trump. And the little bit I've seen is that there's a lot of skepticism by the court to say, well, no, that's not necessarily the case. And so I think that there are much smarter constitutional experts at this than I am. But I think from the political perspective, it kind of does a strange thing, and it freezes this entire election. Like nobody's talking about a primary in South Carolina that's going to happen next week. I mean, they're all talking about whether Donald Trump's going to be on the Colorado ballot. I mean, Nikki Haley cannot catch a break. I mean, she needs desperately to get the attention onto her, and there's no competition between a presidential case in front of the Supreme Court about whether or not he's allowed to be put on the ballot if he'd been a part of an insurrection. I'm sorry, Nikki, but you don't stand a chance busting through that news cycle.
Wow. This is brutal. As we spend time with Rick Davis, we do have breaking news here from the Senate via the Bloomberg terminal. They do have the votes. 60 votes to advance the Ukraine bill, the Ukraine aid bill, without the border package. Rick, we're going to have more time on this. I've got less than a minute right now. Does that indicate that it could pass the full Senate in your view, or do these numbers change again?
Sure. I think this was the harder vote because you had to be able to get this vote at 60, and many of the members were demanding that they have amendment capability. So the fact that they didn't get that and you still got the 60 means that you got a chance of getting this past the Senate.
Amazing. We'll have more on this with Rick Davis straight ahead as the bill passes a procedural hurdle. The question, even if it does make its way through the Senate, what happens in the House? And again, we're going to be talking later on today with the Ukrainian ambassador to the U.S. here in the nation's capital for this important moment. That'll be coming up just after 5 p.m. Washington time. I'm Joe Matthew. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Chip designer ARM Holdings now up by 56.8%. The stock is surging after the company issued a surprisingly bullish earnings forecast showing its push beyond smartphones is helping fuel growth. CEO Renee Haas spoke earlier today with Bloomberg Radio.
We believe that AI is the most profound opportunity in our lifetimes, and we are only at the beginning. When you think about artificial general intelligence and what is required to make that happen in terms of compute, power efficiency, energy, those are all great areas for us to be involved in and focused in. So I think AI is not in any way, shape, or form a hype cycle. I think we're in incredibly early days, and I think it's going to have amazing impact on our planet.
And ARM said revenue in the 3 months ending in March will be $850 to $900 million, far surpassing analyst projections of $778 million. And again, ARM Holdings shares are surging now by 57.9%. Shares of the Walt Disney Company now up 13% after earnings. Disney now at $112.05, up $12.92. It did report better than expected earnings for its fiscal first quarter and issued an upbeat profit outlook for the year, giving CEO Bob Iger ammunition to deflect proxy challenges at its shareholder meeting this spring. Citigroup is weighing a move to cut 51 roles across its wealth business in London as the division's new chief looks for ways to boost the returns generated by the unit. Citigroup shares down now by 1.4%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
Senators are milling around the floor right now after making it official here. They're still voting, to be clear, on this standalone foreign aid package, money for Ukraine, Israel, and Taiwan, $95 billion, in fact, and no border deal attached. It now has the votes to proceed with more than 60 voting to get this on the floor for a real vote. So it passed the cloture test, and the question is what happens next as we turn to our Republican strategist, Bloomberg politics contributor, Rick Davis. Are we going to be in a world here, Rick? I know that there's a lot of question about what happens in the House. Could we be in a world where Democrats get everything that they want here and Republicans get nothing that they wanted?
Yeah, look, I mean, yes, you have a chance that the original concept of getting this supplemental, which when it first started included only security aid to Ukraine, Israel, and Taiwan. Yeah, that has the potential of happening. That being said, I think what has emerged during this debate over the border compromise is that Democrats needed something on the border as much, if not more, than Republicans wanted. And that's because while this debate was going on, voters decided that the border and immigration was more important to them in this year's election cycle than the economy, which had driven the entire election up until this point in time. So when the Democrats start looking at the horizon, what do they have to, campaign on? It's going to be the border, and it would have been something helpful to them if they could have passed this bill.
Interesting. Should Joe Biden not have called for that border component? Remember when he put up the supplemental, he's the one who put it in there, right?
Well, yeah, it was practical, right? The argument was Republicans in the House were saying we're not even going to consider this supplemental without a border provision. And so by doing so, he looked like he was, sort of holding out the fig leaf that, sure, I'll sign something with a border deal on it. And little did we know how much of a border deal he was willing to actually sign on to. It was incredibly conservative, as many Republicans have said in the last day or so, probably the best deal Republicans would have ever gotten on the border in the entire 25, 30 years of debate, and maybe even the next 25 years. So it's kind of be seen as a missed opportunity for both this president and Congress that they weren't able to say yes to what would be a pretty common sense border fix.
We've had some important news from Ukraine today, Rick, as we debate funding for Ukraine. We started this morning with the story in the Washington Post. The Ukrainian military is facing a critical shortage of soldiers. Almost 2 years into the war, nearly a dozen soldiers and commanders told the paper personnel shortages are their most critical problem now, not hardware. While Volodymyr Zelensky's top general departs here, a shakeup in the leadership, and they were arguing about what the most critical needs were in the battlefield. Are we to think possibly that this money arrives too late?
Look, there's always a potential that people will look back in the rearview mirror and say this was a inflection point in the war, and we weren't there to support Ukraine like we should have been. The good news is, while we were fettering away at this in Congress, the European Union approved a $50 billion package for Ukraine that I think would help them hold over the absence of U.S. leadership here. The bad news is that the counteroffensive didn't work. And I think partly what's happening, you see, in Ukraine is a reorganization to try and address the needs of now what will be a much different kind of campaign, probably more on the defensive than the offensive, since the offensive didn't work the way they wanted it to.
Yeah. Insights from Rick Davis, who will be back with us next hour, Republican strategist, of course, Bloomberg Politics contributor with some important headlines. Earlier today in that Washington Post story, the parliament in Ukraine is working on a bill to discharge soldiers who've been on the front for 36 months. That will require replacements. Just a question of how many. Kaylee Lines is on the way in next. Hour 2 of Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's on to Plan B. Welcome to the fastest show in politics as a standalone bill to fund our allies in Ukraine, Israel, and Taiwan clears an important procedural hurdle. This just happened without the border attached. We'll have the latest from Capitol Hill, where Bloomberg's Kaylee Lines just returned from earlier today. Kaylee, this is a significant development in a story that has been going on for months.
It has been a story, a saga with many twists and turns, but the latest is that actually the Senate was able to pass something.
How about
This
it?
proved very difficult
Well,
to get.
almost at least.
More than 60. Well, yes, pass this cloture vote, which is a
Correct.
test vote for the real bill. And you actually have the Senate Majority Leader Chuck Schumer speaking on the floor right now in the aftermath, saying he hopes to reach a deal on amendments to aid the bill, which may suggest that this process is not quite yet.
Are those going to be border-related amendments? Because that's what some
Possibly.
Republican members are asking for after sinking the border bill
Right.
with great flair last evening. So we'll have to see what comes next year.
I cannot believe all of this has shaken out in just a matter of days.
It's amazing. Megan Scully, by the way, who's been running headlines and helping to edit the story on this, is on her way in from
That's
the newsroom
right.
for the latest on this in just a minute.
Yeah, so we are going to get the latest because it is a quickly developing story. But of course, things are moving quick in financial markets as well. So as always, we got to get a check on those with Bloomberg's Charlie Powell.
Thank you very much indeed. You guys watching Congress. I'm watching S&P 5,000. The number you need to know right now, 49.90. We are down today, retreating from a record. Right now, the S&P is lower by a point, little change. Perhaps the key takeaway, but still 10 points away from S&P 5,000. We have got the Dow lower by 25, down 0.1%. NASDAQ, the composite index, pushing even higher, up 40 points right now, up by about 0.3%. 10-year yield 4.14% with a 2-year right now 4.43%. Gold, little change, lower now by $1.84 right now. The precious metal at $2,034, down by 0.1%. Cannot ignore Bitcoin today, up 1.9%. Bitcoin 45,054. Also a big move today in crude. West Texas Intermediate crude up 3.2%, 76.22 a barrel on WTI. Rap stars Snoop Dogg and Master P are suing Walmart and Post Foods, claiming the consumer giants conspired to crush their Snoop cereal. intended as a model for other minority-owned brands. Recapping, the S&P now higher up by 1 point. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power. Hour 2 continues. Back we go once again. Here they are, Joe Matthew and Kaylee Lyons.
Here we are indeed on both Bloomberg Television and Radio. Thank you so much, as always, Charlie Pellet. And Joe, we were just discussing here on set the idea that so much has happened over the course of just a few days. After months of buildup, months it took to actually get the text of the deal that would combine border security with aid for U.S. allies. It was launched or released on Sunday, fell apart almost instantly, finally was killed for real last night. And then we see, I guess, a resurrection of at least parts of the package that were not border security related, now passing cloture on the Senate floor.
Well done. That's what just
happened.
happened.
Is that an accurate summary?
Yeah, look, the ambassador to Ukraine is in town today. Yeah. The Ukrainian ambassador to the U.S., to be clear. We're going to spend some time with her later. This is a critical moment for Ukraine. We know it's a critical moment for Israel. No one talks about Taiwan in this bill.
Yeah.
But apparently the border provisions that Republicans demanded turned out to be the poison pill for Republicans. Right. And that's getting to be hard to decipher.
Yes, it is confusing. To the point you raised a few minutes ago, though, as Chuck Schumer just pointed out, the possibility potentially of amendments to this bill. Perhaps you could see some border-related measures put back in after they were killed.
Somewhat comical.
Yeah.
You figure that out. You let us know. Maybe Megan Scully will. Look, Megan was just cranking on this story in the newsroom about 2 minutes ago, the story that you'll read on the terminal and online, and is with us now. She helps to run our congressional coverage here at Bloomberg. This is like the hand at the end of the horror movie that comes popping out of the water, maybe with one limb, another limb missing in this case.
Yeah.
If it passed the procedural vote, does that indicate that it will pass the full Senate?
Yes, it most likely will pass the full Senate. They've overcome the major hurdle. The issue, though, is what happens in the House. It needs to pass the House, too. And we've already heard from Speaker Johnson that he will not bring this bill up. They're still clinging in the House, so House Republicans, to their much stricter border language. And they're saying, we're not doing anything on this until we get what we want on the border. What was in the very short-lived deal that we saw Sunday and that was ultimately killed yesterday doesn't go far enough for them. But it's dead on arrival with Democrats, the Republican language.
HR 2 is what we're talking about, the border bill that they passed months ago that never even got a vote on the Senate floor. Why not just put it up for a vote and see if it passes? Because theoretically, it wouldn't get the requisite support of 60 votes in the Senate, right? So why not just call the bluff?
Yeah. Well, anytime you put something on the floor, people are taking risks, right? Especially in an election year, when they vote. So if you are Kirsten Sinema, for instance, who hasn't yet decided whether she's running for re-election or not. She's from a border state. This is a huge issue in her district. She doesn't want to vote on the Republican-only bill because that then could be used against her as a vote against immigration changes. So I think that a lot of this election year politics is what's factoring in here. This is why things don't tend to get done, particularly in presidential election years on Capitol Hill.
Steve Daines, who chairs the NRSC, is telling members to vote against this, or was, and I suspect he will again, if this comes to the floor, which we expect that it will that end up having a corrosive effect here as he reminds these members they want to run on the border? If you vote for this, and of course we don't know what changes might go into the bill, you're effectively telling people that you're good for this with this money going out the door without securing the border.
Yeah, so Steve Daines has a much different mandate than Mitch McConnell, per se. He's trying to protect these Republicans who are running, and immigration is becoming quickly the top issue, particularly in these border states, as our own polling has demonstrated. So what Steve Daines is saying is we don't want to have these candidates in a position where they're making a vote that can come back to haunt them in the general election. If you're Mitch McConnell, you're thinking he's made statements on the floor on an almost daily basis on the need to get money to Ukraine. That is what he is being driven by, as well as, from his standpoint, this is the direction that they need to go in order to keep the Senate in November. You have different, you have different.
But that can change votes.
Yes. Yes. Oh, sure. If
And
you're running for
potentially
re-election in a
imperil.
swing state and the chairman of the Republican committee there is telling you this is not a great,
You might listen.
Well, and that speaks to what you were talking about earlier, not just with Senator Sinema, but if you're Sherrod Brown or John Tester, who are in these potentially flippable seats, then it's probably pretty difficult for you to vote against any border-related measure.
Absolutely.
There's another individual I want to raise here because you talked about Daines who potentially will encourage people to vote against this. Rand Paul is suggesting that this is not something he's going to allow to happen in a quick manner because sure, you need 60 votes to pass a bill, but the way the Senate works, you need unanimous consent to do so quickly.
Yes.
So what kind of timeline realistically are we looking at here if he makes good on that threat?
So we're coming up on a 2-week recess for the Senate. And as I've said before, the smell of jet fumes is a powerful motivator on Capitol Hill. I'm not making any plans for Saturday. I will say that. I think that the Senate will be in and working probably that day.
Well, keep that in mind. We'll be here too, maybe. Megan Scully, thank you. Great reporting. Help us figure this out as we make our way through it because it's getting to be pretty complicated. We haven't talked about a funding bill either, Kaylee, because
well, there's that.
3 weeks from now, a government shutdown could be starting. Partial shutdown by the 8th, maybe full shutdown. I just don't know if this is a crowd that's going to be in the business of writing spending bills between now and then.
Well, if you can't pass a bipartisan piece of legislation that actually was pretty much negotiated over the course of months actively versus spending bills that I'm not really sure anyone's actively working on because we're all focused on this kind of stuff, how are you going to get it together in a couple of weeks with enough,
How about that?
enough support?
I have no idea. I look, maybe I'm a skeptic. Let's put that aside for now.
Well, and keeping in mind that after next Tuesday, the margin in the House could be different. Speaker Mike Johnson's already having difficulty getting things done, and yet...
what if Tom Suozzi is the next member
Right.
of the House, which is entirely possible. And the reason why Kaylee points to this is because we've got an election next week, and there are new numbers out today. This is the first credible poll we've seen on New York 3. It's coming from Siena College. Did you see these numbers? It's pretty close, actually. Kaylee, and Siena is working with Newsday on this. Remember, this is the seat held by George Santos. Tom Suozzi in this poll leads Mazi Pilip by only 4 points.
Yes, 48 to 44.
So pretty close to within the margin here. If you're watching on Bloomberg TV or on YouTube, you can see what we're talking about here as we turn to Don Levy for his experience. You know, Don was rated the nation's top pollster by ABC in 538. That is quite a distinction, Don. It's great to have you with us here on Bloomberg. Thank you for joining us. What's going to happen next week in New York 3?
Close race. As you point out right now in our poll, we have Tom Suozzi, the former congressman, up by 4 points over Mazi Pilip, the Republican challenger, who has a really engaging biography. And when we start to break this down by, where voters think these candidates are going to be better, you have opposite sides of the coin. Voters tend to feel as though Mazi Pilip is better on the issue of immigration, what in New York is called the influx of migrants. Also on taxes, they prefer Pilip to Suozzi. But you flip that around, and Suozzi has an enormous lead amongst voters on issues like protecting democracy and on the very important issue in this district of addressing abortion. So voters really have two different views of these candidates. Right now, a small lead for Suozzi.
Well, is this then, Don, kind of a litmus test for the wider general election in November when the issues that you just mentioned, border security and the economy on the one hand, the big talking points for Republicans, threats to American democracy and abortion rights, the talking point for Democrats, depending on how New York 3 goes, what issue it turns out came out on top, should we read that straight through to November?
I think we're going to absolutely read it that way. Whether that's fair or not, I'm not quite sure, but we're going to read it that way. I think we have to add another wrinkle to this story is that in this poll, even though these are special election voters, these are people who are going to turn out on a Tuesday in February, we're thinking that turnout will be no more than 25%. Know that this is a district that in a presidential year, this year, we're probably going to be looking at 62 to 65%. Still, we ask these voters, in addition to who are you going to vote for on Tuesday the 13th, if your vote for president was right now, would you vote for Joe Biden or Donald Trump? And this district moves 9 points in Trump's direction. So instead of a 4-point Democratic advantage, when we pit Biden against Trump, Trump is 5 points up in this district amongst these highly motivated special election voters. So again, if indeed it turns out that Suozzi wins by this 4, and to whatever extent there are any exit polls at all, and these very same voters would prefer Trump, that's going to weigh heavily on the national discussion moving forward.
Don, we heard every day while George Santos was still in office and there was an effort to have him ousted, starting about a day after he got here, that he was ruining the district for Republicans for the foreseeable future. Does this tell us that the people of New York 3rd are forgiving to the Republican Party because they have blamed the man?
Well, certainly the voters in New York 3 have a very strong Republican base. The Republican Party has a tremendously effective ground game there. Joe Biden is not popular in New York 3. He's about 18 points underwater in his favorability. And some of these issues, taxes, protecting New York 3 and New York in general from what is seen in the district as an uncontrollable influx of migrants, and also the issue of safety and crime in general. These are all issues that have worked in New York in general. You remember that Lee Zeldin came within 6 points in a race for governor against our governor, Kathy Hochul, in a state with a 2-to-1 Democratic advantage. So New York, although historically bright blue, is starting to trend a little bit towards the purple tone, especially in a place like New York 3.
Well, and when Joe was talking about the candidates in question here and how it's coming after George Santos, who obviously no longer is in Congress and can't be considered an incumbent here. But when we think about the body of Congress and the view of it, I also noticed you polled voters on the idea that Suozzi used to be in Congress. And the question you asked was new energy and new ideas representing us in Congress. Do voters think that's needed? 58% said yes. Should that be a warning for all incumbents?
Well, it's certainly a warning for Tom Suozzi. Tom Suozzi is known in this district. Voters, in many cases, a majority feel as though he's had his chance. He was a 3-term congressman. Prior to that, he was the county exec in Nassau County. So there is a little bit of, we've seen this guy. Now, at the same time, you know, Tom Suozzi has his backers. And when we ask voters about some of the normal work of Congress people, issues that are important in this district, 9/11 relief, energy issues, the folks in New York 3 see Tom Suozzi as being probably more effective than Mazi Pilip. So there is some anti-incumbent, and in some ways, Suozzi is representing more the incumbent than, of course, is Pilip. But still, there's an undergirding of strength that Suozzi has in the district. He's known. This is a district that felt as though they got blindsided. Mazi Pilip, although her biography has been really well vetted, has not been front and center around the district. They're debating tonight, the first debate. It's the first time that Suozzi and Pilip will appear on the same stage. So there are still some voters who have not been fully introduced to Pilip, despite the amount of money that her campaign, and to a greater extent, Suozzi has spent trying to tell the voters of this district who these candidates are. Suozzi says he's a common sense problem solver who's going to go do the work of this district in Congress. The district knows him. Mazi Pilip is an unknown person, an engaging biography, and rides this wave of anti-Biden sentiment, of concern over crime, concern over migrants.
Yeah.
It's going to be a close election that's going to come down to turnout. In our poll, we have the turnout being equal percentages of Democrats and Republicans. We do that because we anticipate that Republican ground game really getting Republicans out. If this turnout looked like an election year, in an election year, the Democrats have a 10 to 11 point advantage in turnout. So Tom Suozzi has already said if he were not to prevail in the special, he's going to run again in November. An election year turnout, he might have a better opportunity than he has this coming Tuesday. Still, very close, 4-point lead for Suozzi.
All right, we brought you the authority here from Siena College. He's the director of Siena's Research Institute, Don Levy. Great to have you, Don. This sounds like an awfully important debate tonight. We appreciate you sharing your work with us here on Bloomberg. Don't be a stranger. I want to hear from Don next time they do a big poll on the presidential race, which will be later on this month. I'm Joe Matthew alongside Kaylee Lyons on the fastest show in politics. Thanks for being with us on the radio, on YouTube, and on TV. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 121 now on Wall Street. ARM Holdings up 57%. Walt Disney Company up 12%. U.S. stocks trading mixed. Equities are fluctuating after the S&P 500 came very close to hitting 5,000 for the first time. Right now, the S&P is at 49.92. Lower little change, down less than 0.1%, lower by 2 points. So the stock market losing a bit of steam after hitting a record. Traders today focused on that S&P 5000 number. Individual investors as well. The Dow down 38, drop there of 0.1%. NASDAQ higher by 32, a gain of 0.2%. 10-year 4.14%. We've got the 2-year 4.44%. Treasuries fell despite strong demand in a $25 billion sale of 30-year bonds. And again, we've got spot gold lower by $1.50. Little change there, down 0.1%. 2,033 the ounce, while West Texas Intermediate crude up 2.9%. WTI right now 75.98 a barrel. Hertz shares are trading lower today, down 5.6%. Morgan Stanley had turned bullish on Hertz Global Holdings back in mid-January, citing positive changes that the rental car giant was making to its electric car fleet. But now, analysts have downgraded their recommendation on the stock, hence the move lower. Hertz now dropping by 5.6%. Recapping stocks mixed, the Dow, the S&P lower, NASDAQ is higher, S&P now down by 2 points. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
With Charlie Pellet. Thank you so much, as always, Charlie, for joining us from New York. Joe and I indeed are live on both Bloomberg TV and radio in Washington, when there's been a lot to discuss over recent days. But something, Joe, we should note as well is the issue of the Congressman Matt Rosendale, who apparently is jumping into the Montana Senate race, one that could be one of the most closely watched in 2024, because the incumbent Democrat, John Tester, could be vulnerable. But you get a Republican actual primary contest, maybe things look different. And we all woke up this morning to news that the Speaker of the House, Mike Johnson, might be endorsing Rosendale for the job, and then he pulled it.
This is really funny. If you like the backroom drama here, Mitch McConnell, the Senate Leadership Fund had gone with a different candidate here. So you wonder if Mike Johnson was poking Mitch McConnell in the eye, or what the whole point of this was.
Well, there's certainly been a lot of poking between the two chambers going on in recent days. We know that to be sure. But actually, the Congressman Rosendale weighed in on X just a few minutes ago, saying, Speaker Johnson and I have always had a great relationship. I am thankful for his continued support. Going on to say, Mitch McConnell and the D.C. cartel are terrified about me going to the U.S. Senate. They know they can't control me. They know I won't vote for McConnell as leader.
Unbelievable.
So there's the latest on that.
Rick Davis must have thoughts on this.
I'm
He joins
sure
us
he
now.
does.
A Republican strategist who's been in the throes of a lot of back and forth in the Senate. Of course, Bloomberg Politics contributor. What do you make of this, Rick? What is Speaker Mike Johnson doing?
Well, Mike Johnson is kowtowing to Donald Trump, which we've seen a lot of lately. There's no other explanation for him to get involved in a Senate primary as Speaker of the House than if he's just towing someone else's load. The reality is Mitch McConnell and the entire Republican caucus need 2 seats. They need Tester's seat, this race, and they need West Virginia, which is almost a foregone conclusion. So the Tester race is probably the most important race in America for Mitch McConnell and the Republicans to regain a majority. And they went out of their way to recruit Tim Shea to be that candidate, knowing after the 2022 elections that candidates matter. And those candidates that Donald Trump, the hands selected, like Rosendale, lost to Democrats. And so this was the hope that they could get competitive candidates to be in these seats. And this Rosendale's continued persistence in the primary just ties up the race, expends needed resources for a general election, and frankly is a lifeline to Democratic Tester. So it made no sense why he would stick his nose into it. It makes a lot of sense why the Speaker got his nose punched and went back into his turf. And so now we'll see whether or not Rosendale can mount any kind of real significant challenge against Sheehy.
Amazing.
Okay, so maybe the Speaker shouldn't have cared as much about this race or been as vocal about that. But Rick, we know that he definitely cares about the race that's ongoing right now in the 3rd District of New York. We were just speaking to Don Levy of Siena College about this, because there is that special election to replace George Santos, who was kicked out of the House of Representatives, coming up quickly next week. When we're talking about a speaker in Mike Johnson, who already has had great difficulty getting anything done, including the impeachment of the Homeland Security Secretary attempted earlier this week, and the Israel aid standalone package that also was attempted and failed earlier this week. What changes for him if this seat flips to the Democrat?
Yeah, no, I mean, it's like the nightmare scenario. He started with the smallest margin in the history of a major party control of the House, and it's only gotten smaller since he's been elected Speaker, which hasn't been for that long. So it's a disaster. Democrats see this as just another opportunity to hold things up in the House. They're on defense, and frankly, Republicans, if they lose another seat like this one, they're going to be on defense too, and nothing's going to get done. And it really does portend, as Joe and you mentioned earlier, a real crisis potentially with the funding of government, because right now there's no plan publicly announced by the Speaker on how he's going to actually knit together, some vehicle that allows the government to be funded. And certainly not before the deadlines that he self-imposed on these CRs, continuing resolutions. And so I don't know. I mean, it's a very big problem coming up. I know we've all been focused on the supplemental and the immigration package, and those are incredibly important, but nothing is more important than funding the government.
You've been of the mind that they can pull this out of the fire here, Rick. Are you starting to get concerned because we've got a recess coming and not a lot of time to write these spending bills?
Yeah, trying to legislate like this in an election year is crazy, right? I mean, speakers and leaders in the past say, we got to get all our work done on time in an election year for president, because nothing ever happens in the election year. It's just too political. And we saw just that happen, with this immigration package. I mean, Republicans demand an immigration package. They get one and then they have to vote against it. Makes them look foolish. Republicans extend the budget until the first quarter of this year, and now they're going to have a hard time finding the votes for it. It is a no-brainer to package together these appropriations bills and pass the budget. They were supposed to have done that by September 30th, and they have been just kicking the can ever since then. They have a top-line negotiated agreement, so the hard part of knowing how much you're going to spend has already been done. And the fact that you then apply that to each of these appropriations bills is not that hard a task. But we just don't see the committees doing the work to get those things passed. Maybe it all gets thrown into an omnibus. That would be certainly an easy way to get it done on time. I say on time, at this time. And maybe this is what the Speaker's, maybe even his last act will be to fund the government.
That would be saying something after he's only been the Speaker for 100 or so days, and by mid-March we'll be at what, maybe 150?
It'll be
shorter lived than Kevin McCarthy.
This prospect, is it going to be a State of the Union, or is it going to be a State of the Union without Speaker Johnson sitting behind Joe Biden?
Can the State of the Union even go on if the government has partially shut?
There are great questions here.
I guess Congress keeps doing its work, right?
Not necessarily. If they're not in session. In fact, I think Rick was encouraging Joe Biden to do the speech from the White House. Am I right, Rick?
Yeah, absolutely. I mean, the president does not actually have to be in the well of the House of Representatives to give the State of the Union. In fact, they used to just send over a memo and never even did the speech. So the reality is, if his political campaign prevails, they would say, absolutely, you got to talk about the State of the Union because it's messed up. And without your leadership, it's not going to get any better. And so show leadership by giving the speech, sitting in the Oval Office behind the Resolute desk, and convince Americans that you are the only one who are keeping the lights on right now.
Well, Donald Trump would probably beg to differ on that argument. And it raises the question for me, Rick. We just saw what Trump was able, even if it wasn't entirely due to his thumb on the scale, his influence perhaps in members of the House, and how that ultimately proved enough to kill this border deal entirely. He used to be suggesting, back when we were dealing with continuing resolutions about to expire twice before this, that Republicans shouldn't be fearing a government shutdown. Could it, whether or not it happens actually come down to whether or not the former president gives his blessing for it to happen?
Well, we've seen him meddle in the House business this week. So sure, that could have an influence on it. Although we haven't heard that from any of the leadership or even the rabble-rousers in the Freedom Caucus lately, that they actually want the government to shut down. I mean, that conversation was really more germane, at the end of last year. We haven't seen people actually think that's a good strategy right now. So the hope is that nobody actually believes that it's somehow their political advantage to shut the government down. and that they do find a resolution to this, or what happens in these cases, a year-long continuing resolution gets thrown on the floor and voted on. That actually results in a budget cut based on the top-line numbers that they'd already agreed to, but it also hurts the Defense Department at a time when we're in conflicts all around the world. And, I sure wouldn't want to be a Republican leader who has to go back to his district and explain to people that I was just party to a huge cut in defense spending at a time when our security is in jeopardy.
Rick Davis, we thank you as always, Rick. Thanks for the analysis and the clutch insights here as this bill clears a procedural hurdle in the Senate to fund Ukraine, Israel, and Taiwan. Rick was with us a bit earlier when this happened, and it looks like it could pass the full House here. Kaylee, this is important. It happened just a short time ago, teeing up a floor vote sooner than later.
So it could pass potentially the full Senate, given the tally that we've seen in the test measure today, if you will. The House, though, is a massive question. For everything we were just discussing with Rick, this is a speaker who has proven to have great difficulty exercising control over his conference, and also still has the motion to vacate potentially hanging over his head with every decision he makes. And there's members like Marjorie Taylor Greene who have said, yes, we will bring that if you put Ukraine aid on the floor of this chamber.
Indeed. It was only 2 days ago, by the way, a standalone Israel funding bill in the House failed. So let's wait to see what happens, because we simply can't predict it. Let's get you up to date on what else is happening around the world. World and national news now with Nancy Lyons in the Bloomberg 99.1 Newsroom in Washington. Hi, Nancy.
Hey, Joe, you've been mentioning it. The Senate has voted to work on an aid package for Ukraine and Israel following the collapse of that border deal that was initially included in the package. The vote to take up a new package cleared on a 67-32 vote. The most consequential election case since Bush versus Gore is underway at the Supreme Court. Jonathan Mitchell, the lawyer for former President Trump, argued today the Colorado Supreme Court was wrong to remove him from the ballot under the 14th Amendment's Insurrectionist Clause, also known as Section 3.
President Trump is not covered by Section 3 because the president is not an officer of the United States, as that term is used throughout the Constitution.
Jason Murray, the lead attorney for the Colorado voters who filed the lawsuit, refutes Mitchell and says the measure covers all positions of federal power that require an oath to the Constitution.
He says Section 3 disqualifies all oath-breaking insurrectionists except a former president who never before held other state or federal office. There is no possible rationale for such an exemption.
Chief Justice John Roberts pointed out states have used Section 3 to disqualify insurrectionists before. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is 1:40 on Wall Street. We are looking at the S&P 500 index advancing just 3 points away right now from S&P 5000 up a point to 49.97. Up by less than 0.1%. We got the Dow Industrials, though, in the red on the minus side right now. The Dow down 19, dropped there of just about 0.1%. NASDAQ Composite Index up 52, higher by 0.3%. Treasuries fell despite strong demand and a $25 billion sale of 30-year bonds. 10-year right now, 4.14% with the 2-year, 4.44%. Gold, $2,032 the ounce, down 0.2%. West Texas Intermediate crude up 2.9%. 76.01 a barrel on WTI. And Bitcoin up 2.2%, 45,170. ARM Holdings surging 57% now after earnings. Walt Disney after earnings up by 12.9%. Among the names today reporting after the close of trading, we will be hearing from Cloudflare and VeriSign. Recapping, S&P 500 index at 49.97, up now by 1 point. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of power continues. Once again, Joe and Kaylee.
All right, Charlie Pellet in New York. Thank you so much. And you know who else was up in New York? A bunch of Biden donors in recent days, Joe. And we've had a lot of conversations on balance of power, on Bloomberg as a whole, in recent months about things that the president says at events with donors, at campaign events, that don't necessarily reflect what the administration broadly says that their position is, or even actually reflect factual accuracy at some points. And there's been a bit of a mix-up in identifying European leaders at a few events in recent days. The latest confusing Angela Merkel with Helmut Kohl.
They're not the same person.
They're not the same. No.
Then again, Donald Trump seems to be confusing Nikki Haley and Nancy Pelosi. So maybe this is all kind of a wash here in the presidential cycle. The fact is, these fundraisers, though, that's where the good stuff is said.
Right.
And there's always somebody with a cell phone or a reporter with a pad who maybe shouldn't be there. And this stuff leaks out. That's what makes the real news. Look at the last 5 times Joe Biden's made news about Taiwan.
Yeah.
It was behind closed doors at a fundraiser with donors.
Yeah, saying things at fundraisers like Xi Jinping is a dictator.
Exactly.
And getting in a little bit of not trouble, but it didn't go unnoticed by Beijing.
So you had the flub there, then you had the on his heels remark about Vladimir Putin.
Yes.
Which is interesting, as we're going to see an interview with him later, I hear, right?
With Tucker Carlson, indeed, who went to Russia
different show.
for that. Yes, that's a different show. The interviews we care about happen here
Fair
on
enough.
Bloomberg, of course. And we're about to do one ourselves with one of our very own, Saleha Mohsen, who's a senior Washington correspondent for us, and also the host of the Big Take DC podcast. Saleha, if we could just first begin, and I know you have another episode that's coming out, but just with what we're seeing from an 81-year-old president, a lot of gaffes that have taken a lot of notice from voters and from media like ourselves. Is this like, are we just paying so much attention to it because we know that he's 81 years old, or is this something much, much larger?
Like Joe said, Trump has also made similar gaffes, mixing Nikki Haley and Nancy Pelosi. Biden mixed up Helmut Kohl, who has passed away, with Angela Merkel. He was telling a story that he's told many times about his first G7 meeting as a president for the U.S., but still making mistakes. I think it's the general election hasn't really started yet, but it has started. People are just looking for clues, for help. Show us that you guys can handle even just the campaign, let alone another term. Both of them are vying for a second term, basically. Can you handle it? They want to see one gaffless speech so that we can stop talking about their age, but they keep baiting it.
Is it the age, though, or is this just what candidates do and they think nobody's actually listening or recording?
That's true. A lot of people make muck-ups, right? You guys are on air all day. I don't know how you get through the day without mixing up words. I know. I think you do.
We never make mistakes.
No, I think you're right. You don't. But, you know, when you're on the trail that much, you're right. It is something. It's going to happen. You're going to mix things up. But, you know, they are campaigning and they know that age is an issue. Trump talks about Biden's age, so then you keep your side of the street clean and don't make the same mistakes and focus on that. Biden knows that voters are concerned about his age. So, hey, man, have some coffee.
Take a drip. a drink of my caffeine right now, if you don't mind if I do. Joe referenced another remark, though, that the president made specifically about Ukraine and its ongoing war with Russia, talking about Vladimir Putin being on the balls of his heels, which I had to read a few times.
But I think we're mixing metaphors.
It's usually
there.
balls of the toes, or you're back on your heels.
Or you're on
right?
your heels, yeah.
Right.
Where he's doing both. Maybe he's flat-footed.
Sure. The point was he was trying to make a point, Saleha, about Ukraine, the importance of continuing aid to Ukraine. Maybe there's some progress underway on that in the Senate, but it just broadly raises the question of the U.S. decisions around Ukraine and the war Russia has conducted in Ukraine financially. And I know you are talking about that on this week's Big Take podcast.
Absolutely. This week on the Big Take DC, you can download on Apple, Spotify, or wherever you get your podcasts. We are talking about OFAC, the Office of Foreign Assets Control. It is the tiny, mighty sanctions office that is in a nondescript building a couple of 100 yards from the White House, and they are so powerful. Since 9/11, their sanctions execution and use has gone up by 1,000%. Wow. But their budget and their headcount, by comparison, is relatively flat. So I had on the show former OFAC director John Smith. He joined me. He's now based in Europe for Morrison & Forrester, a law firm. He was at OFAC for years and years, and he was talking about the importance of this underfunded but hugely influential agency.
We're going to hear from him now, yeah? Let's listen.
It's implementing dozens upon dozens of sanctions programs, including some of the most important to our U.S. national security and foreign policy, and it simply doesn't have the resources that it needs.
What else did he tell you?
So he's the former director, actually, of the Office of Foreign Assets Control. And he is talking about how much power they have, but they don't have enough funding to enforce these sanctions. So the private sector ends up having to do a lot of the enforcement themselves. Sometimes they'll fess up. We might have violated things, and you get a little bit less of a fine and better treatment from the government if you do catch something and you let the government know. But these fines can go into the billions of dollars. And then there's reputational damage for any organization or big bank that has been caught.
When we talk about foreign assets, and this ties back to the question of whether or not Congress is going to agree to provide additional funding for Ukraine, there has been conversation around potentially other mechanisms of funding, including using seized Russian assets to do so. This office would handle that in some capacity, right?
Oh yeah, back when we were seeing all the Russian yachts being seized and people tracking them, and CNN and Bloomberg TV and other networks showing up trying to see, what are you going to tow the yacht? How is this going to happen? A lot of that was happening at OFAC.
Wow.
It's not going to stop happening, I assume, as long as Vladimir Putin is in this war with Ukraine. But the matter of funding remains a question, which we've been talking about for the balance of this hour with this vote happening today in the Senate. If Ukraine never gets this additional supplemental funding, can sanctions and reclaiming of or freezing of Russian assets help to fund this effort?
Any amount of money will help. There's a big debate going on right now if the immobilized assets, something around $500 billion that the U.S. and a lot of the G7 nations came together and levied in February of 2022, so 2 years ago, if they can use that for Ukraine's reconstruction, I think that is almost like the down payment. It's going to be a huge amount of money. And the thing is, Joe Biden has said America is the essential nation, so we need to be involved as a global leader. So if the U.S. government gives a little bit through Congress for that, then other funding may also be unlocked.
And we're just talking about $60 billion at the moment. And you just said half a trillion?
$500 billion in the war chest that they froze.
Wow.
Pretty remarkable.
Indeed.
The news today from Ukraine is not great. The Washington Post reporting that there's a critical shortage of soldiers. We're going to get to a breaking point here, one way or the other, depending on where the money is coming from. They need it now.
Yeah, and how quickly can they get it? If they get it at all, at least from the United States.
Fascinating stuff. The Big Take DC podcast drops today, right? Like right now. So subscribe if you haven't already, just like you do the Balance of Power podcast. Look for Saleha Mohsin. Great to see you, Saleha. We have this conversation each week at this time. We'll give you a heads up on what's coming out in the podcast. With a lot more ahead, Kaylee Lyons is here. I'm Joe Matthew. Thanks for joining here on the fastest show in politics, on the radio, on the TV, and on YouTube. Stay with us. Some final thoughts next. This is Bloomberg.
listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
This is Balance of Power on Bloomberg TV and radio. We are almost wrapped up with this hour, but we still have a lot to discuss. We've done a lot of domestic politics today, Joe, as finally you did see the Senate taking a step forward, at least on a procedural vote, to put forward supplemental funding for not just Ukraine, but for Israel as well, as we also keep a close eye on what's happening in the Middle East.
Just following a miserable showing on the big bill that included the border deal and all of this same money. This is basically the same bill. They hacked off the border stuff that became too toxic for Republicans who were demanding it and said it didn't go far enough. So it looks like Democrats, the president might get the emergency funding without the border.
Yes, $60 billion plus for Ukraine, and then money for Israel as well, and Taiwan too.
Yeah.
And of course, this all has bearing on the active conflicts we are seeing in the world right now. And Bloomberg's Nick Wadhams, who leads our U.S. national security team, is covering them all. Nick, specifically with what's happening in the Middle East, of course, there's been a lot of tension, engagement between the U.S. and others in the region, strikes that are continuing to be conducted. The U.S. taking out a commander of an Iran-backed militia that they said is responsible for planning attacks on U.S. troops just last night. How escalatory was that?
It seemed pretty escalatory to me. I mean, but the issue there that's really interesting is that the Biden administration, said we are going to respond at a time and place of our choosing, and it really hasn't been clear what that was going to look like. Now we are starting to see things really take shape. So you had this initial barrage of airstrikes where they hit like 85 targets in Iraq and Syria. Then they did some strikes on Yemen. Then they did a few more strikes in Syria and Iraq. And now they're going after individuals. So what you're seeing is not so much, well, maybe it's a couple prongs. You're seeing on the one hand a desire to degrade their ability, these proxies' abilities to attack U.S. troops and attack commercial shipping, but also they're going to target individual leaders in a way that Israel has done against Hezbollah and Hamas. So this would seem to be a much more aggressive approach, but obviously there's a big difference between that and dropping, many, many tons of bombs.
Well, it was amazing to see the footage of this strike last night. It happened in Baghdad, one individual car, and it went up in flames, and almost nothing around it seemed to be, at least anecdotally from looking at it visually, affected. This was precision.
Yeah, I mean, it's terrifying, the capability they now have, which also includes these drone strikes where the missile does not actually have, in some cases, an explosive on it. It's basically a spinning series of blades, and it can hit a vehicle and not cause any sort of secondary explosion. So when you start to see the administration deploying these things, what it really shows is, okay, I mean, the way I look at that is we are nowhere near done. This is going to go on for a long time, and they are going to go after the leadership of all these groups, and they really want these guys running scared and not being able to coordinate new attacks.
This is coming against some real volatility in Ukraine as we talk about both of these conflicts at once. President Zelensky replacing, or I guess has accepted the resignation of his top military leader. The Washington Post this morning reporting that we're at a critical shortage of soldiers now, and they were arguing about how many would be needed. What's the state of affairs in Kyiv?
It is getting more and more bleak. I mean, on the one hand, though, Ukraine obviously is very well dug in. So it's just extraordinary to me how much the conversation has shifted. It was a couple short months ago that we were talking about the counteroffensive and whether that was successful and what more was going to be needed. You had Zelensky coming to Congress saying we need fighter jets and we needed tanks and we needed all that's off the table now. They are really shifting to a very defensive strategy. Working in their favor is the fact that they are very well dug in against Russian forces, and it doesn't feel like Russia's really going to be able to take a ton more land. But obviously, there is a severe amount of strain, and any notion that they will be able to take back the land that Russia took is essentially off the table now.
You used the line from Joe Biden at the fundraiser earlier, said that Putin's on the balls of his heels. I think we know what he meant by that he's back on his heels. Is that true?
I
thought he was doing pretty
to me,
well. Right?
What I heard there, so they had Putin on the defensive.
Yeah.
Which
now,
would be on the heels,
on the heels, but then the balls of his feet, to me, would suggest that he's ready to pounce.
Yes.
Yeah. So, and I think that's what Biden means there. That, listen, well, he's not maybe necessarily ready to pounce in terms of like taking back a ton of land, but this all works. The politics of this, the U.S. divided, parties going after each other, finger pointing, blame game. I mean, he loves it.
This is the only effective interpretation I've heard yet. This,
Thank
if you
you,
did
Nick.
anything for us today, Nick, and now I think I get it.
That's what I'm here for.
Nick Wadhams, thank you. Thanks for taking time out of your day. I know how busy you are. He runs our national security coverage here in Washington. Nick Wadhams here on Balance of Power. Should we turn to New York here? It's almost business week time. Carol Master and Tim Stenovic are standing by. Hey, Carol, what do you have coming up?
We're just kind of loving your conversation. On his heels, on the balls of his... Like, what was it? Like, it's just...
Balls of his heels.
You know, all I care is that people are thinking about what's going on in Ukraine and Russia, because I think it's something that easily can fall off the radar at this point with so much coming at us. Having said that,
no doubt,
market's kind of meh, but Disney on a tear, so are shares of ARM Holdings. So, folks, we're going to dig into that over the next couple of hours.
Yeah, we're also going to be joined by Barry Ritholtz in just a bit. He had a great interview with David Einhorn, so we're going to dig into that a little bit and get to how he's thinking about U.S. markets, guys.
Well, speaking of the U.S. market, Carol called it meh. We're basically flat on the day, but 499.4.
We're so close.
We're almost at 5,000.
Like, what is
if
it?
this were the Trump administration, we would all see hats pretty soon.
The tweets would
S&P
be
5K. And
Hey,
I just wonder how Biden's going to deal with it.
Can we just round it up at this point and just
Yes.
say, all right, 5,000, make the T-shirts, make the
Round
hats,
the
and move
clothes.
on. Yeah, exactly.
Absolutely.
Right. All right,
we
guys.
could listen to Barry Ritholtz all day long, by the way. I can't wait for that. You know who I'm talking about, kid.
Of course.
He's one of the best.
Masters in business.
Absolutely. And Carol and Tim are too. I'll meet you at 5 o'clock for
Indeed.
Balance of Power Late Edition. Should we call it that?
Sure.
With Kaylee Lyons, I'm Joe Matthew. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Maser.
I love looking at different things that are going on in our economy. The Fed president's kind of battled it out about what's going to happen next.
And Tim Stenovic.
This story really struck a chord with me. The cost of education. Consumers are out there spending money. They have jobs, and they're continuing to spend money.
On Bloomberg Radio.
It is definitely Friday's Eve, everybody. A very good afternoon. You are listening and watching Bloomberg Business Week, radio, TV, YouTube, and Bloomberg Originals. Carol Master along with Tim Stenovic. And yeah, Kaylee Lyons said it right. Like, that's how I feel about the markets, at least on the equity side of things. It's kind of a meh trade a little bit.
Seen a little bit of green. The NASDAQ up 0.3%, but the Dow and the S&P, little change right now. Treasury yields higher on another economic report that shows strength in the labor market. That's our market backdrop this afternoon.
Yep, so we're going to dig into some of the individual equity movers, including Disney. Tinkerbell would be very happy. Shares of Disney soaring the most in more than 3 years at the home of the Magic Kingdom. So is that rally justified? Turned the corner, as we heard from CEO Bob Iger. We're going to get into the balance sheet and talk about the fundamentals and the outlook of the company.
Also, the most read on the Bloomberg terminal today, Greenlight Capital's David Einhorn says markets are, well, fill in the blank. You're going to have to stay tuned to find out what he had to say about equity markets.
Yeah, and speaking of most read on the Bloomberg, shape up or ship out, that kind of feels like a message at one of the biggest consulting companies. We'll explain. I do feel like there's a flurry of stories when it comes to jobs where companies are saying, right, Elon, Tesla, was it Tesla? Or
Yeah.
Space, or like, hey, take a look at yourself. Is your job justified?
Look, I think companies are being cautious right now. It's certainly a theme that we've seen, especially with the success that we saw with Meta Platforms and what Mark Zuckerberg did over the last year with this, quote, year of efficiency. I think companies are starting to take note. Also, speaking of that, in economic news today, U.S. initial jobless claims falling for the first time in 3 weeks. It's another sign of strength in the labor market. This is a voting Fed member says that the Fed has time before cutting rates. We've got that exclusive interview.
Be patient, everybody. All right, first up, a check on the day's trade. Let's head on over to Charlie Pellet.
Hi, thank you very much. And here's what you need to know right now. We have got the S&P 500 index at 49.95 on S&P 5,000. Watch, big round number, but right now we've got the S&P up by 1 point. Has been swinging between gains and losses. A little change right now, perhaps the key takeaway with the Dow up 7, gain there of less than 0.1%. NASDAQ, though, keeps on going up another 41 points, up by 0.4%. Treasuries struggle to gain traction despite a strong $25 billion sale of Long-term bonds that capped a week of ramped-up issuance sizes. Right now, the 10-year 4.15%, the 2-year 4.44%. Gold down $3 the ounce at $2,032, down 0.2%. West Texas Intermediate crude now surging 3%, $76.12 for a barrel of WTI. Cannot ignore Bitcoin. Right now, we've got Bitcoin up 2.5%, 45,298. ARM Holdings, the chip designer, a stock we're going to be talking a lot about today, surging by 54.1%. Disney, after earnings, up now by 12.5%. Also keeping an eye on Apollo Global Management. It reported a profit that did beat analyst expectations. And Citigroup weighing a move to cut 51 jobs across its wealth management business in London. Again, recapping, S&P now flat on the day at 49.94. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We did definitely get another read that showed strength in the U.S. labor market. Initial applications for U.S. unemployment benefits falling for the first time in 3 weeks, suggesting employers are still largely holding on, Tim, to their workers.
Continuing claims, a proxy for the number of people receiving unemployment benefits, dropped to 1.87 million in the week that ended on January 27th. Meantime, in a Bloomberg exclusive, a voting member of the Fed says, slow your roll, everyone. Policymakers have time to be patient about the timing of rate cuts, pointing to that strong labor market and continued disinflation.
All right, maybe he didn't use the word slow the roll. Maybe that was
our
like,
words. That was the general theme. That was the vibe.
Patience, patience. All right, let's get to the interview with that voting FOMC member who talked exclusively with our Bloomberg News International Economics and Policy correspondent Michael McKee earlier today on Bloomberg Surveillance. It was a must listen to. I certainly was listening. Tom was too. Mike, Richmond Fed President Tom Barkin, remind everybody, voting member, hawkish, dovish, what does he tend to do?
He tends to be a centrist. It's funny because you were saying exclusive interview. It was an exclusive interview to us, but everybody from the Fed these days is basically saying slow your roll. They're trying to talk the markets down from this 5-6 rate cut idea, and they've sort of pushed out the Fed until May, but there's still that many different rate cuts priced in. We couldn't get Tom Barkin to commit to a number of rate cuts or a day for when they might cut or may, but his view was they need to be cautious because they don't want inflation to go back up again. They want to be certain that it's going to continue going down. After that, he said, the interesting question, I'm paraphrasing here, is how far it goes down, because the economy is doing fine right now and we're at 5.5%. So how far do you have to lower rates? How far can you lower rates? I mean, what's the best thing to do? That's going to be their next tough decision.
Is the market listening to these members of the Federal Reserve? Are they taking note of what they're saying and responding accordingly?
Well, they're listening because every time one of them comes on the tape, the markets move. They change their forecasts, and in most cases, they reduce the odds of rate cuts, and then they come right back again when we get, as you pointed out, a strong if meaningless data point. And so,
Mike McKee's words. I don't know about meaningless.
Mike McKee's words,
well,
not ours.
Why is it meaningless?
Well, the jobless claim, it's a very high frequency indicator, and the week-to-week changes don't mean all that much. Last week, we had a big rise. If we'd had another big rise this week, it might have meant a little more, because then you're keeping an eye out for a change in the trend, but it went back down, suggesting last week was just kind of noise.
What about continuing claims?
Continuing claims you watch for the same reason, but they went down again too.
Right.
And the thing that they're telling you is how easy it is to get a job, and it doesn't seem to have gotten any harder, which would be what you would be looking for. And to go back to what you were saying at the beginning, what Barkin was saying today is that companies are slowing their hiring, never mind what happened in January, but in general, companies are telling him they're slowing their hiring, but they are not letting people go.
I love that. He said, right, there is not as much hiring, not as much firing going on. I thought that was really crucial.
Yeah. Well, we talked about this, I think, the last time I was on. The idea that we're seeing a lot of these notifications of tech companies letting people go, even if they're only a few hundred here, a few hundred there. But there's some that announce thousands of job cuts. But there's so much churn in the labor market that those really aren't that big. And what he's saying is this is not We're not seeing a widespread layoff problem. We're not seeing a recessionary labor market right now.
What are the numbers you'd have to see, Mike, in order for that to change?
Well, I think you'd be looking at a continual rise in the jobless claims numbers over 300,000 or more, a significant change in the direction there, a significant slowdown in net hiring, which is what the payrolls report is. The Fed has always said that you need about 100,000 jobs a month to remain stable in the labor market, not a soft or not a hard, tight labor market. And we were at 353,000 last month, so we're a long way from anything like that.
Listen, when you talk with these Fed regional bank presidents, what's important is addressing stresses, right? And they keep a real watch on certainly any kind of financial strain or stress. Look at the banking system very closely. You guys got into regional bank worries.
We did. I think you have a little bit of a Tom Barkin soundbite.
Let's play it out for everybody.
You can feel the stress in the commercial real estate area, particularly, of course, downtown office. So that's a real thing, and the banks, many banks and non-banks have exposure. It wouldn't stun me if a bank or two ended up wrong-footed in those things. But the system knows that real estate is a asset with a certain amount of risk, and I hope and expect that we've got enough capital to weather that.
That, of course, is Richmond Fed President Tom Barkin. I hope and expect that we've got enough capital to weather that. Is that reassuring? Enough reassuring?
That's a good question. I hope. I mean, they should know a little bit about it. He did go on to point out that they've done a lot of stress testing on this, and they're working with the banks on a regular basis. So I think from his point of view, they have enough, but they don't know what the depth of any problems could be, so that's where the hope comes in. But he seemed relatively confident, as others do, that at this point, there are the regulators, not just the Fed, but the OCC and the FDIC, are as on top of it as they can be. The question is what happens then going forward. How bad do things get? One question I really wanted to ask him, and I did not get a chance to, is, and this is something maybe you guys can ask experts that you talk to about these things. NYCB was the problem there was a huge drop in the stock price because investors got worried about the losses they had on their loan books. But the regulators don't think it's a huge problem because they can raise capital and they can come back. But could an investor run lead to a customer run?
It's a great point.
And if investors lose confidence, then do people, the ordinary person on the street, lose confidence?
We haven't seen that with New York Community Bank yet.
Well, there's a reason for that, which I did not know until today. I just found out this today. In the last year, because they were trying to diversify and grow, NYCB not only took on the Signature Bank bad loan portfolio that is causing them problems now, they also bought Flagstar Bank, which was a healthy, normal deposit-taking bank. And when they did that, they moved most of their deposit activity to Flagstar. Had you heard Flagstar in connection with NYCB?
Yeah.
So whatever's happening to NYCB, Flagstar's fine. People did not know that Flagstar is their deposit-taking institution, so there's no reason for them to worry. And there doesn't seem to be anything wrong with Flagstar, so seems to be okay.
Hey, Mike, 10 seconds on CPI tomorrow. What are we expecting?
Well, we're looking for revisions to CPI tomorrow. Last year, the revisions to the seasonal adjustments pushed the level of inflation down at the beginning of the year, but at the end of the year, it raised it. And so Chris Waller from the Fed said, this is going to be really important tomorrow to see if we have that. It was an unusual thing, doesn't usually happen. They normally have very small movements, but they are going to be very interested to see what happens tomorrow with the revisions.
All right, we'll keep a watch on it. Mike, thank you as always. Michael McKee, of course, and check out his interview, full interview with Tom Barkin of the Richmond Fed. You can find it on the Bloomberg and at Bloomberg.com. All right, let's get to a stock that is on the move big time today. We're talking about almost a 13% gain on Disney today. I think it's the most intraday in more than 3 years since December of 2020, soaring after reporting better than expected earnings for its fiscal first quarter. It also issued an upbeat profit outlook for the year, giving CEO Bob Iger, it feels like ammunition, right, to fight against some of those activist investors come that spring shareholder meeting.
Lots of moving parts at the Magic Kingdom. Let's get to it. Back with us and always tracking the day-to-day moves on the news of Disney is Bloomberg Intelligence Technology and Media Analyst Geeta Ranganathan on Zoom from BI headquarters in Princeton, New Jersey. Geeta, good to see you. Good to have you back. The stock is soaring. Is this because Bob Iger said in the earnings commentary that the, quote, strong performance this past quarter demonstrates that they've turned a corner?
They definitely have, Tim. I mean, we saw so many positives from that report last night. I mean, I think the number one metric, of course, was that EPS guide, which they provided, which is 20% EPS growth in fiscal 2024. That was almost double of what the street was expecting. So huge upside there. And then the one metric I think that everybody has been like overly obsessing on and where they're really making good progress is their streaming profitability numbers. So the losses came in 70% lower than what the street was expecting, with just 138 million in losses. And so while they continue to say that they only expect to be profitable in the September quarter, I think really what the street is kind of looking at is it's going to come much sooner, probably in fiscal 3Q, maybe even in the next fiscal 2Q. So everything kind of really looking up for them. And remember, if they do get that streaming, and they will, I mean, they are definitely going to get the streaming business to be profitable. We had Hugh Johnston actually come out and give us a number, said expect double-digit operating margins here. And I think that was a real powerful statement from him. So once we kind of have that business in profitability mode, then the earnings potential of this company is going to be just huge and it's going to explode.
So, Geeta,
I think that's what. Yeah.
No, I'm sorry. So, forgive me. Finish, please.
No, and that's why we're kind of seeing that whole reaction, because there's so much potential in terms of that earnings momentum there.
So he also talked about, billions in dollars, ultimately in terms of cost cutting. So it's not just about cost cutting. Maybe that's part of it, but it's really about organic growth at their businesses.
Oh, definitely. I mean, cost cutting, of course, was a huge part of it. So remember, just a few months ago, Bob Iger had come and said, he had two distinct things that he wanted to do with the company when he came back last November. And, one of the things was to kind of fix all of the wrongs. And the next thing was to kind of build or rebuild the company. Obviously, as part of that fixing was, all of the cost cutting measures, kind of finding all of the efficiencies in the business, just implementing cost cutting across the board, both content as well as non-content. And as a result of that, he kind of took the savings estimate up from $5.5 billion to $7.5 billion. Now, what they did yesterday was they said, more than $7.5 billion. So they are finding, cost savings, and they're extracting so much of savings across the board. And that, obviously, again, extremely good operational execution here. But yes, it's not just about costs. It's, it's about profitability, future profitability, and future investments too. In terms of strategic direction, we saw that for ESPN. We saw that with that $1.5 billion investment in Epic Games.
Hey, Geeta, how should investors be thinking right now about Disney's TV assets, especially given the news earlier this week about that Hulu of sports, and also given that we know that Bob Iger has talked about spinning some of them off?
Yeah, I don't know about the spinning off just yet. He talked about it, then he walked it back. I think right now what they want to do is they want to kind of hold on to all their assets, because I think they still see a lot of value. Remember, ESPN, yes, they are taking it over the top, but in its linear format right now, it still kind of generates about $3 billion in EBITDA for them. So it's really critical to them. It is a cash cow still. Now, in terms of what the financial impact is going to be, Tim, that's going to be a little bit hard to say with both the sports super app as well as the ESPN Plus standalone app that's kind of coming out next year. But I think what it does is strategically, it definitely tells us that Disney has a plan in place. They know what they're doing. They are planning to add this on to their bundle, the Disney streaming bundle, which has been an extremely successful proposition. They know that over 40% of their subscribers are actually bundled subscribers. So they know there's a lot of value there in terms of the content resonating and in terms of them limiting churn. So churn, which is such a huge problem for other streamers, not such a big problem really for Disney. So they know that when they add on this ESPN product, it's only going to further, kind of reduce churn. So I think overall, strategically, definitely a good move. Again, financially, not so clear just yet because we don't know the price points.
Enough to keep Nelson Peltz off their back and Bob Iger's back? What do you think? Just got about 30 seconds.
I definitely think so. I mean, I think, obviously cost cutting, full marks, in terms of strategy, again, he's articulated an ESPN strategy. And in terms of investment for future growth, and this is where that whole epic piece kind of comes in, he's doing that as well. So I think it's more than enough for Nelson Bells at the moment.
Hey, one more question I'm going to squeeze in. My producer's going to go crazy. 15 seconds. Years ago, ESPN was the juggernaut of Disney. What's the juggernaut right now, really quickly?
Parks. 65% of profit. It is the parks, and it will be the parks for a long time to come.
Unbelievable stuff. All right, Geeta, thank you so much. Always appreciate it. Geeta Ranganathan, she's our technology and media analyst at Bloomberg Intelligence on Zoom from our BI headquarters. And you've got Disney shares, folks. They're up 12.8% in today's session. Man, they are on a tear. All right, you're listening and watching Bloomberg Business Week. This is Bloomberg.
It's 2:21 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. We have got the S&P 500 index now at 49.94, 6 points away from S&P 5,000, down now by half a point. Little change, pretty much the theme all day long. The Dow now lower by 4, also little changed. NASDAQ higher by 33, a gain there of 0.2%. Treasuries struggled to gain traction despite a strong $25 billion sale of long-term bonds that capped a week of ramped-up issuance sizes. The 10-year right now at 4.15% with a 2-year that's yielding 4.44%. Gold lower a little change, down 0.1%, $2,033 the ounce, while West Texas Intermediate crude rallying 3.1%, $76.18 for a barrel of WTI. Hertz shares down 2.5%. Morgan Stanley had turned bullish on Hertz Global Holdings in mid-January, citing positive changes in the rental car giant was making to its electric vehicle fleet. But the bank has now reversed that call, with Hertz trading lower by 2.5%. Again, recapping, 1-point drop in the S&P 500 index, lower little change right now at 49.93. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much for the update. Well, put a well-known hedge fund manager in the headline, making a call on today's market environment, and yes, you kind of get everyone's attention.
Yeah, we're talking about Greenlight Capital's David Einhorn, value investor who isn't shy about sharing his views or making controversial calls. Let's get to the chat. It's now the most read story on the Bloomberg terminal. Barry Ritholtz is the host of Masters in Business, broadcast and podcast. He's chairman and chief investment officer of Ritholtz Wealth Management. He's here in the Bloomberg studio. Barry, good to see you. Greenlight Capital founder David Einhorn, well known to the Bloomberg audience, longtime value investor. He's done really well. He's also had some off years. What made you want to talk to him?
Well, I know David for, I don't know, about 10, 15 years, and he's not a particularly aggressive media person. He kind of low-key doesn't... Every now and then he'll pop up and say something. He hosts these poker tournaments to raise money for, I think it's the Michael J. Fox. Michael J. Fox Foundation. He used to do the Sohn conference all the time, but he's kind of low key. And when, hey, I have something to say. All right, let's get you on and have a conversation. I've been begging him to come on for, 5 years. Finally, he said, I want to talk about this. All right, let's get you on and have a conversation.
What was top of mind for you?
So he said a number of things that really stood out. Some of it is obviously the big market structure issue was one thing, but he talked about how the SEC, they'll enforce a little insider trading, but on broad market issues, the SEC, he thinks the regulators aren't doing their jobs. I mean, he said that. But the biggest takeaway that I find so fascinating, look, some guys start out running a hedge fund or a venture fund. They put up great numbers for a couple of years, 5 years, 10 years. Then something shifts and they, no longer can keep up. And usually that's where the story ends. What's so fascinating about this second act of Greenlight Capital is, why is value underperforming? Why are we not hitting our numbers? What's changed? And they did a deep dive, figured it out, and it made adjustments. That's rare in finance to see someone say, we're going to change. Oh, and by the way, they've been outperforming for the past few years.
It's the headline heard around the Bloomberg universe. Let's get to Greenlight Capital founder David Einhorn talking on Masters of Business with Barry Ritholtz. Here's what he had to say.
I view the markets as fundamentally broken. Like the number
fundamentally broken. That's a big statement.
Yeah, there's value is just not a consideration for most investment money that's out there. There's all the machine money and algorithmic money, which doesn't have an opinion about value. It has an opinion about price. Like, what is the price going to be in 15 minutes? And I want to be ahead of that. Or 0-day options. What is the price of the S&P or whatever stock you're doing for today? What's it going to be in the next half hour, 2 hours, 3 hours? Those are opinions about price. Those are not opinions about value. Passive investors have no opinion about value. They're going to assume everybody else has done the work.
Right.
And then you have all of what's left of active management, and so much of it. The value industry has gotten completely annihilated.
All right, that, of course, is Greenlight Capital founder David Einhorn talking on Masters of Business with Barry Ritholtz, who is here in studio with us. Barry, is this just the value guy being frustrated after kind of the, kind of blow up if you've seen over the last, 5-10 years in terms of indexing?
Well, it's more than that. Historically, the way value investors operate, hey, the market is trading, pick a number, 16, 18 times. Let's find stocks trading at 10 and 12 or 12 times earnings, and eventually everybody will figure out what we figured out, and the stock will go up. Einhorn makes the argument that On the technical side, between single-day options and algorithmic trading, people are focused on price for the next 15 minutes, not 15 quarters or 15 years. But additionally, passive flows to BlackRock, to Vanguard, to State Street tend to go to the biggest market caps. They tend to go to growth stocks. And what we've seen is not only short sellers becoming an endangered species, but value investors seeing outflows and a lot of value funds closing. So what used to happen, find a cheap stock that everybody has overlooked, and eventually people figure it out. Since that doesn't work, we have to look for really cheap stocks with decent growth, high quality, improving profits, so they have the ability to do stock buybacks and dividend increases. And even if the rest of the world doesn't figure it out, that return of capital to shareholders will show up in the performance.
So speaking of performance, what has Einhorn done well over the past few years? What's worked for him, and how did he shift strategies?
So once they figured out, and I'm paraphrasing what he said, once we figured out that the traditional approach to value wasn't working because of these passive flows and because of the algorithmic trading, plain old passive is no good. We need plain old value isn't working. We need deep value. And then second, we can't rely on other people finding out what we figured out. So we have to find these companies that are self-correcting, meaning, hey, if the dividend is high enough, it doesn't matter. If the share buybacks are high enough, that's just math. So that was one issue. The other issue is, they really changed how they looked at the world and who is out there in the marketplace institutionally to do what they do. And I think, to me, the most fascinating part of the story is, hey, what we're doing isn't our fundamental philosophy investing.
We're going to change.
Is no longer working. Let's take this down to first principles. Let's rebuild from scratch. And the past 5 years, they've really been crushing it.
And still a value guy. It's just value 2.0.
Deep down inside.
Right? It's not like he's like jumping on board the growth train.
Right. Well, they do merger arbs, and I kind of get the feeling if the right short trade came along, he would love to find another Allied Capital or another Lehman Brothers and see what happens with that. But deep down inside, he prides himself as being an analyst as much as a fund manager.
One thing I wanted to ask you, at your shop, you guys do a lot of passive investing. What did you make of his comments?
I thought so I'm constantly defending passive because there's been this backlash that has been, I want to avoid using the wrong words. They've been silly is probably the nicest way I could describe it. The argument that somehow BlackRock and Vanguard are going to put their hugely successful franchises at risk to price fix the cost of airplane tickets is just the dumbest argument. And there have been a bunch of law professors that have said stuff that honestly, it's aged like brie on a dashboard in July. Just dumb arguments.
Not good.
This is the first time someone has, basically said, here's what's going on. So MIT's Professor Andrew Lowe has argued, hey, price discovery really isn't going to get impacted by passive till it's 90% of the market. It's 50+% of ETFs and mutual funds, and it's much less, speaking broadly. It's just in those two types of funds where it's a majority. Einhorn makes a pretty persuasive case that because of the way fund flows have happened and because of, when I look at the S&P or the Vanguard total return, it's not that I don't care about value, it's that I know over the decades, the valuation side of that over time will straighten out. If you're a dollar cost average, if you're making regular contributions to a 401k or even a non-retirement account, hey, sometimes you pay a little above average, sometimes you pay a little below average, but in the long haul, it'll all come out in the wash and it's fine. And for the average investor, I think that's a really good way.
But it's a bit of a tortured trade, isn't it, or strategy? I feel like, we constantly have people come on and, talk about value, and yet you continue to see some of these big growth names continue to move higher. They're a big part of the economy or a fair amount of part of the economy.
No,
right?
they're not a big part of the economy. Let's put some flesh on those bones. What everybody complains about, the Magnificent Seven, that's just too much. Collectively, they do $2 trillion in revenue. That's an insane number. over $250 billion in profits. Of course, everybody wants to own those. The modern world allows these companies to dominate the world in ways that you never had before. It was much more of a diversified economy between patents and look at the Apple ecosystem buy-in.
Well, so then going to his SEC oversight or concerns about that, then to some of that makes sense to you?
Oh, absolutely. So this is the first time someone has given me a criticism of passive where I'm like, oh, that really resonates. I'm not going to change the way I'm investing because what he's arguing is the market is determining who has the greatest growth prospects, and we don't really see that as being valued.
So 30 seconds, could regulators do something to correct this?
Should they? I think it's, so he pointed to the SEC. I think it's more the FTC breaking up monopolies and preventing these giant monopolies from forming, which we're seeing more and more of during this administration.
And especially if you talk to European officials, right?
Absolutely. They would love to cut these in half.
Well done.
Well, thank you so much.
You've had a big day.
It's been a lot of fun. He's just a fascinating guy. I really find everything he does and says. And I love that he doesn't really say it very much. When he comes out and says something, it really matters.
Well, as we said, it's been the most read story on the Bloomberg all day. So well done. Barry Ritholtz, host of Masters in Business on Bloomberg Radio and his podcast, Chairman and Chief Investment Officer of Ritholtz Wealth Management.
Hey, let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. Former President Trump says he did watch today's arguments before the Supreme Court. The justices are needing to decide whether he should be disqualified from the Colorado ballot because of his efforts to overturn election results, as well as his connections to the attack on the Capitol.
I thought the presentation today was a very good one. I think it was well received. I hope it was well received. You have millions of people that are out there wanting to vote, and they happen to want to vote for me.
The case marks the first time the justices are considering the constitutional provision, Section 3 of the 14th Amendment, that was adopted after the Civil War to prevent former office holders who engaged in insurrection from holding office again. It's unclear when the Supreme Court will issue its ruling. Well, it does not mean the bill is passed, but the Senate today did vote in favor of advancing a foreign aid package that does not include any border policy changes. The 67-32 vote means the Senate can begin consideration of the $95 billion package to provide aid to Israel, Ukraine, and Taiwan. It's still unclear if the aid package can ultimately make it through Congress. Those robocalls you may have received that sound like family members, celebrities, or politicians, well, the FCC is now outlawing them if they were created using artificial intelligence. The ruling takes effect today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a 3-point drop right now in the S&P 500 index at 49.91, 9 points away from S&P 5,000. Stocks doing a whole lot of nothing right now. Little changed on the S&P. We've got the Dow lower by 11, down less than 0.1%, virtually unchanged on the day. NASDAQ, though, up 18. That is a gain of 0.1%. Treasuries struggled to gain traction despite a strong $25 billion sale of long-term bonds that capped a week of ramped-up issuance sizes. 10-year yield, 4.16% with a 2-year, 4.45%. Spot gold down $3.50 the ounce to 2,031. Drop there of 0.2%. Crude up 3.5%, 76.49 a barrel on WTI. ARM Holdings, this stock up 48.3%. The chip designer surging after the company issued a surprisingly bullish earnings forecast. Also after earnings, the Walt Disney Company is now up by 12.3%. It reported better than expected earnings for its fiscal first quarter. It also issued an upbeat profit outlook for the year. Recapping stocks, little changed. S&P at 49.92 right now. The S&P 500 index down by 2.5 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you know, the big game is this weekend. We're talking, of course, about the 58th Super Bowl between the Kansas City Chiefs and the San Francisco 49ers. The game held in the gambling capital of the United States, Las Vegas. Betting companies pushing out lots of ads ahead of the game, including this one from BetMGM.
BetMGM is for everyone that loves sports betting. Everyone. But Tom Brady.
Wait, what did I do?
The truth is you've won too much, Tommy. Let others have their turn.
What if I bet in-game parlays and I'm not Tom Brady?
You're in. Now dog me.
All right, well, MGM is for everyone that loves sports betting, everyone but Tom Brady. Wait, what did I do here? All right, the truth is you want too much. It's just funny, like, to just kind of go through what they said. These are, though, the ads that we're seeing roll out ahead of it.
I mean, it makes sense that we're seeing these ads because big money is expected to trade hands this year. According to the Gambling Industry National Trade Association, about 26% of American adults are expected to place a wager on the Super Bowl. It's a 35% increase from last year's Super Bowl. Bettors are estimated to place wagers totaling up to $23.1 billion, which is a $7 billion increase from 2023. We've got with us Adam Greenblatt. He's the CEO of BetMGM, joining us now from Las Vegas. BetMGM is the sports betting operator jointly owned by MGM Resorts and the Isle of Man-based gambling company Entain. Adam, good to have you. Good to see you. Give us an idea of what you're seeing on BetMGM's platform right now ahead of the Super Bowl this weekend.
Well, firstly, thank you for having me. We are seeing interest that we've never seen before. Cross-section of wagers. We're seeing the growth in prop bets. We're seeing the Swift effect. We are seeing, yeah, as I say, a lot of interest. I think also because the event is taking place in Vegas, which really is home turf for us.
So, Swift effect, does that mean more women are stepping up and betting on the platform?
Well, actually, we're seeing it's what we're noticing is the nature of the bets that are being sought out has changed. So, for example, we now offer in Ontario, we now offer the likelihood of Taylor Swift being mentioned in the MVP speech. And that's an interestingly popular bet. We're also seeing a lot of support for Travis Kelce as MVP. And I think that's how the Swift effect is manifesting.
Well, that's what I wonder too, Adam, is the kinds of bets that are being placed. The majority of bets that are being placed ahead of the big game, is it basically who wins ultimately? Or give us some idea, because you really can now dice and slice in terms of how you bet on anything.
So just to set the context, BetMGM will be offering more than 1,000 different things to bet on come game day. In fact, the majority are available now. Historically, the majority of bets and majority of volume were behind what we call the six-pack, which is really the bet for and against who will win the game, the money line, spread, so by what margin will the winner win, and the total points. What we're seeing now is a shift. So 62% of bets are not on that. So more than half the bets are on things called player props. The most popular player prop at the moment is a win that the Chiefs will win by 7 to 12 points.
Okay. Hey, Adam, is this the way that you differentiate yourself from the competitors out there? Because there is no shortage of places to make bets, especially for the Super Bowl. I mean, we got DraftKings, we got FanDuel, we got Caesars. The list certainly goes on. How do you differentiate yourself in a crowded market?
Well, look, the market's been crowded since the beginning. And I think we have, BetMGM's proven that we know what it takes to win. And we continue to be a market leader. We have 17% market share in online sports betting and iGaming across North America. And so this puts us firmly in the top tier of competitors. And one of the things that is particularly in our favor this year is that the two leaders that we share the podium with are actually not available in the state of Nevada because of regulation. So this really is our moment to shine. BetMGM's on home turf, leaning into what we call our omni-channel strategy. And given that we are by far and away the premier choice in town, we're expecting to see tremendous volume.
All right, but how would you characterize, Adam, the level of promotional competition in the online sports betting industry now compared to a year ago? It's got to be somewhat fierce, but tell us how you would characterize it.
Well, it's interesting. That's what we're actually seeing, and I'm not sure whether it's as a result of some of the minnows, some of the smaller players actually leaving the market because the power and effectiveness of the leaders has become overwhelming. But we're actually seeing a rational recruitment environment. Our CPAs, our cost to acquire a player, are actually down year on year over the last few weeks.
Hey, I'm wondering about growth here because you're live right now in 28 different markets in North America. You mentioned the market share. You have access to just under half of the adult population in North America. When is a time that you think you will have access to every adult in North America?
Well, that's an important question because that's about when does the music stop? And the good news is the music is not going to stop for a while. Our TAM, our total addressable market, anticipates that in the fullness of time, and there's a question mark on what that means, of course, but in the fullness of time, we expect fully 80% of the U.S. adult population to have access to some form of sports betting.
What do you think are the next two states to legalize or markets set to legalize over the next 1 or 2 years?
Well, the first one I can answer with authority because we're looking forward to launching in the state of North Carolina in the next 4 weeks.
Okay.
After that, it's less certain. We're seeing some positive movements from a number of states. I think the most likely next one, as we look at it today, is the state of Georgia. But ultimately, these become legislative decisions and subject to all the vagaries that go along with those.
Would you say that the space is getting a bit crowded and that we're going to see some kind of additional maybe consolidation or more consolidation?
I don't know that I think you're referring to a couple of the more recognized brands that have joined the space recently. I think there's probably space for 3 or 4, maybe 5. If we look at more mature international markets, perhaps the UK, Italy, the bigger markets, there's generally space for 4 or 5 leading major online players. In the US, it is more concentrated, actually. To your question, is there space for consolidation? Potentially. But one of the factors weighing against consolidation in the US particularly is just the complexity of the operating environment, given that every state is its own regulated environment. So, for a merger in the US, it's like a European operator that operates in all of the European countries merging with another.
Hey, Adam,
and then figuring out the regulation that goes along with it.
That's true.
We only have about 20 seconds left, but are you looking to make any acquisitions?
Gosh, straight for it. We're very, very happy with the tools, the assets, the relationships that we have. We believe we have what it takes to win, so we're not considering actively any acquisitions at this point.
All right, 20 seconds. So important that in terms of we talk about sports addiction, gambling addiction, you guys are thinking about that, and just really quickly, about 10 seconds here.
This is a real issue. This is an issue of sustainability of our sector. We're making great strides individually as BetMGM, but also in 2024, we will see collective action in this regard.
Adam, thank you so much. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apollo Global Management reported a profit that beat Wall Street expectations as higher rates bolstered the alternative asset managers' growing credit and insurance businesses. Apollo up now by about 1.7%. Citigroup weighing a move to cut 51 roles across its wealth business in London as the division's new chief looks for ways to boost the returns generated by the unit. Now, according to a memo seen by Bloomberg, sent to staff, those cuts will affect about 10% of the unit's 485 staffers in the UK, and the bulk of the roles being eliminated would be from the assistant vice president to director level. Citigroup shares down now by 0.4%. Brookfield 12% drop in distributable earnings in the fourth quarter as its real estate business was less profitable and it posted smaller gains from asset sales. The Canadian firm is the parent of Brookfield Asset Management. Right now, we've got shares up by 2.1%. In the airline industry, Spirit Airlines reported a smaller fourth quarter loss than expected and said it does have the liquidity it needs to stand on its own. Revenue of $1.32 billion matched Wall Street views with demand for travel strong over the December holidays. Spirit is fighting to preserve its acquisition by JetBlue Airways. Spirit up 0.5%. JetBlue right now is trading higher by 1.5%. And Alphabet's Google has rebranded its chatbot and rolled out a new subscription plan that will give people access to its most powerful AI intelligence model. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Carol Masser live from Bloomberg headquarters in New York. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the D.C. newsroom. Hey, Nance.
Hey, Tim. The Supreme Court heard arguments today over whether former President Trump can be banned from the ballot in Colorado. The state's highest court ruled Trump can be taken off the ballot under the 14th Amendment of the U.S. Constitution due to Trump's connection to the January 6th insurrection. Trump counsel Jonathan Mitchell said Trump cannot be banned because under Article 3 of the 14th Amendment, it references banning officers, not elected officials.
Officer of the United States refers only to appointed officials, and it does not encompass elected individuals such as the president or members of Congress.
Mitchell also argued Congress needs to pass legislation to enforce Section 3 of the 14th Amendment, but others say that clause is self-executing and requires no legislation. Based on the questions posed by the justices, it looks as if they may have reservations about banning Trump from the ballot. Change is underway in Ukraine. President Volodymyr Zelensky says it's time for a change at the top of Ukraine's armed forces, and he thanked Valery Zaluzhny for leading the troops for the past 2 years. U.S. National Security Council spokesman John Kirby weighed in on the decision.
President Zelensky is the commander-in-chief of his armed forces. He gets to decide who his leadership is going to be in the military. That's what civilian control is all about. We know that.
Admiral Kirby speaking at today's White House press briefing. Today's move by Zelensky is the most serious shakeup at the top military brass in Ukraine since the full-scale Russian invasion. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nancy, thank you so much. Nancy Lyons there in our DC newsroom. All right, now let's get to one more thing. And this is something you and I were talking about kind of in the newsroom. It does feel like increasingly we see often every day another company, a lot in the tech sector, cutting jobs. But it also does seem like increasingly we're seeing companies say, hey, look at, either bosses, look at your workers or look at yourselves and, kind of justify your job. And I feel like this plays into a story that's on the terminal that is among our most read all day about McKinsey.
Yeah, it's held steady up there in the top 3 most read. McKinsey & Company has warned about 3,000 of the firm's consultants that their performance was unsatisfactory and will need to improve. The firm gave these employees a so-called concerns rating as part of their performance reviews in recent months, this according to people familiar with the matter. So, Carol, with that rating, employees are typically given about 3 months to show improved performance. If they're unable to do so, the firm may begin counseling some of them to leave the company entirely. Is this like a performance improvement plan?
I guess so.
Or is this
Sounds
like the
it.
old days of GE cutting people, Six Sigma type thing?
I don't know. It's interesting. What they do say in the story, the proportion of staffers receiving the concerns rating is largely in line with past years. The fact that the firm's headcount has swelled so dramatically in recent years has meant that the ratings have been handed to far more employees than in prior periods, according to those in the know. McKinsey's headcount has swelled to about 45,000 employees, up 60% from the 28,000 it had in 2018. I'm guessing through the pandemic, like so many others, that it bring people in who were, they're probably their clients were like, how do we make it through? What do we do? Work from home, just different things that were going on.
But it also says something about the consulting industry and says that it's kind of the latest sign in the consulting industry that it's pulling back after the boom times of the pandemic.
Yeah, right. This back to the normal situation. Is it a new normal, or is it just getting back to normal where we were pre-pandemic?
This is what everybody I went to business school wanted to do.
Be a consultant?
Yeah. This was like the number one thing people wanted to do.
All right. The story among the most read in the Bloomberg. Hey, coming up for those of you watching TV, up next is the close for those staying with us. Bloomberg Business Week continues. We're going to check in with Mattel CEO Ynon Kreiz, take a look at their quarter and how the stock is doing. And then we're going to get into ARM, man. We are obsessed with that, surging the most since its IPO at a record. Lots more to come on Bloomberg. With it. Meantime, you've got Treasury struggling to gain traction despite a strong $25 billion sale of long-term bonds that capped a week of ramped-up issuance sizes. So that's kind of your market setup on this Thursday.
You're Carol Master. I'm Tim Stenevec. We got a great program ahead. Mattel's sales up 16% in the most recent quarter. Shares bouncing around. We're going to check in with CEO Ynon Kreiz in just a few minutes.
Yeah, looking forward to talking about, and I am curious about Barbie 2. Is there another movie? They're also
it's like
working
your favorite movie of 23.
Lots of content creation. It was a pretty good movie. Got me back to the theater.
I love Alan. I love Alan.
NVIDIA, ARM surging the most since its IPO at a record after giving a strong sales outlook. We touched upon it, scratched upon it last night with our Ian King. We had to bring him back because we wanted to know more. But we've got a nice little roundtable about ARM and really the whole semi-sector, if you will.
Well, we've also heard from the CEOs of some large private equity firms, or I guess these days they're called alternative asset managers. We're going to check in with one about what's in store for private equity this year, including 10 outrageous predictions.
Yeah, that certainly has me intrigued. All right, and stick around for syphilis. We're going to explain, I know that sounds a little crazy, what's not crazy.
I even hear Charlie Pellet laughing.
Don't laugh. It's serious because it's on the rise, folks.
There's nothing funny about syphilis, Carol. Okay? It's on the rise.
You're killing me. All right, also, the battle for the bird, the definitive account of the fight over the world's most influential social media platform. We've got the author of a new book on Twitter. Don't call it Twitter, call it X. That is certainly what Elon Musk wants us to do.
All right, first up, a check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. Certainly going to stick around for S&P 5000. That's the story we're watching on the business side of things right now. We've got the Dow, the S&P, NASDAQ, all pushing higher. Carol asked the right question. Can we get there? 59 minutes to go until that closing bell clangs on Wall Street, with the S&P right now up 1 point, 49.97. That is a gain of less than 0.1%. Keep it locked into Bloomberg Radio for the very latest and complete reaction if and when we do get to that magic 5,000 number for a lot of people. Dow Industrials up 31, gain there of 0.1%. We've got NASDAQ, the composite index, up 44, higher now by 0.3%. 10-year, 4.16%, with a 2-year, 4.44%. Mona Mahajan is senior investment strategist at Edward Jones, and on surveillance this morning, she told us you cannot ignore the calendar.
When January is higher, there's that old saying in the markets, so goes January, as goes the year. And so January was up about 2% in the S&P 500. When we look back since 1950, years. There's been 44 years when January has been higher. 39 of those have been followed by a positive full-year return, and positive by an average about 18%.
Again, we've got the S&P right now 49.98, up by 0.1%. 10-year 4.16%, the 2-year 4.44%. Spot gold down $2 the ounce to $2,033. Little change there, down 0.1%. West Texas Intermediate crude up 3.6%, 76.49 a barrel. Chip designer ARM Holdings surging now by just about 50%. We've got ARM pushing higher, up now by 49.44%. Disney also surging today, up 11.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Come on, Barbie, let's go party.
All right, folks, we are talking about the home of Barbie and so much more. Mattel, the stock bouncing around today, up as high as nearly 3%, lower fractionally as we speak, actually pretty flat now. The home of Barbie, Hot Wheels, and as we said, so much more. Reported sales as well as adjusted earnings per share for the fourth quarter did miss the average analyst estimate, but adjusted gross margin for the year, it did beat the analyst estimate.
Yeah, sales were up 16% in the fourth quarter. Let's get to it with Ynon Kreiz, chairman and CEO of Mattel. He joins us from El Segundo, California. Ynon, good to see you. I got to tell you, sometimes when we interview you, I just expect like Will Ferrell to show up right there, and it's not Ynon Kreiz. But we are happy to see you this afternoon. How are you doing? How is we heard from you guys yesterday. Stock bouncing around a little bit. Sales were up, but a couple things did not come in line with analyst estimates. How are you thinking about the quarter and the year?
Well, thank you for inviting me again. It's always good to be here with you. It was a very strong fourth quarter for Mattel, with double-digit growth in top and bottom line, with significant margin expansion. The year as a whole was a milestone year for the company. In addition to the incredible success of the Barbie movie, which we could not be more proud of, we extended our leadership in key toy categories and gained significant share overall, and continued to strengthen our financial position. We talked on the call about the fact that we generated over $700 million of free cash flow, more than 2.5 times of last year. We achieved an investment-grade rating in the year. Our balance sheet is in the strongest we've had in years, and we just announced a $1 billion share repurchase program and believe we're in an excellent position to continue to execute our strategy.
So what else do you do with that strong cash flow and all that money? Where else do you want to invest it? Investors love when you give it back, but where else can you kind of invest it back in the business?
Well, in terms of capital allocation priorities, the number one area that we focus on is organic growth, and we're looking to continue to invest in areas that can create value and position the company for long-term, sustainable, profitable growth. We also look to maintain our investment-grade rating and keep our leverage ratio between 2 to 2.5 times debt to EBITDA. And of course, there are M&A opportunities that we're looking to look at and consider. We'll be very disciplined. We will make sure that whatever we do is thoughtful, strategic, and accretive to the company, and continue to be in line with our strategy for value creation.
All right, Ynon, you know us well. You say M&A opportunities, our ears perk up. So what might be some of those M&A opportunities? How are you thinking about it? Because who would have thunk maybe 10 years ago, 15 years ago, that you guys would be creating content and creating a movie that was the highest in terms of gross billings for 2023. So here you are. So when you think about M&A opportunities, where do you go, or where should we be thinking when it comes to you guys?
Well, we can't be too early to be specific about opportunities.
Well, you could, but
too early. But as I said, we have been very disciplined in the way we manage our balance sheet over the years, and we remain very thoughtful and very strategic about any choice that we might make when it comes to capital deployment and on M&A opportunities. That said, we have the capital, we have the strength, we have a very strong platform that is scalable, and we would look for opportunities that would accelerate our strategy without putting the company under any risk, and make sure that it's accretive and strategic to the direction where we're heading.
If we can follow, though, is it more akin to an acquisition that gives you another toy to play with and build content off of it? Or is it more on the content creation side that you guys, in terms of M&A opportunities, Ynon, might be most interested in?
Too early to be specific, and it's not to say that we don't have exciting organic opportunities. You know, we have a portfolio that proven itself within the toy side, and of course now we have template and showcase for what we can do outside of the toy aisle. And you know, some of the important takeaways from the year was how our brands resonate outside of the toy aisle. And that is a key part of our strategy to be successful within the toy part of the company and continue to evolve and grow in entertainment. Other verticals that are highly accretive and adjacent to the toy industry, but where we can create value from organic growth.
Hey, Ynon, I want to talk a little bit about the 2024 outlook. We learned from you yesterday, and I think that some might say it's a little conservative because it calls for a third straight year of flat sales growth. How conservative are you being here?
Well, we do expect the industry to be down in the year, and in that context, we expect to gain share and be ahead of the industry and continue the momentum that we have already with very strong market share gain in 2023. Our priority for 2024 is on growth in profitability, expanding our growth margin, and generate strong cash flow. And this is something we've done successfully in 2023. We believe that we will grow in 2025, both top and bottom line. And with the strong market share gain and overall strong performance, broad-based performance within the toy industry, we see multiple drivers that will continue to put the company on the front foot as we execute our strategy.
And I think, though, I guess we're all wondering, you guys do get a great vantage point when it comes to the consumer. I think a lot of us would say if we want to, get something for one of our kids, like that is a priority. So in terms of consumer and consumption spending, what are you seeing? How would you describe the consumer from your perspective?
Well, what we saw in 2023 is a shift in consumer spending towards experiences and services. And we see it moderating. It will continue to moderate in 2024. And beyond 24, we believe that those trends will further improve and that the industry will return to growth and continue to grow over the long term. The toy industry as a whole has very strong fundamentals. It's an important part of consumers' lives. It's a fundamental core human behavior. The toy aisle is a strategic lever for retailers. It's experiential. It drives foot traffic. Items are affordable. And especially when it comes to quality product and trusted brands, parents will always prioritize spending money on their children and cut on other things rather than quality toys for their children.
If you're just joining us, we're speaking right now to Ynon Kreiz, Chairman and CEO of Mattel, joining us from El Segundo, California. Ynon, I want to talk about specific brands and segments within Mattel's portfolio, specifically Fisher-Price. The brand had a great fourth quarter. Do you believe you can extend the momentum here? Do you expect to gain share when it comes to infant, toddler, and preschool market this year?
Yes, Fisher-Price did have a great quarter. It was up double digit. It was number one in the category and gained more share for the full year. Within Fisher-Price, Little People performed particularly strongly and expanded into adult collector line with some great product for the Super Bowl. So look out for that.
Great.
Okay, what about when it comes to Hot Wheels?
Wait,
go ahead.
Wait. How much demand is there? Give us an idea.
No, as you can imagine, of course, it's in high demand, and Little People is such a great brand, and this is where we touch culture. This is our expertise and something we do so well. You have a product that is evergreen, but here, we have moments and opportunities to touch societal moments like the Super Bowl and create a special offering for that.
Is there a Taylor Swift Little People? That's what we want to know.
anything is possible for little people. Just, watch that space.
All I know is my daughter likes to eat the little people, okay? What about Hot Wheels? Because it reached just $1.6 billion in gross billing for 2023, surpassing Barbie. Do you see Hot Wheels staying the #1 brand for the foreseeable future?
Yeah, Hot Wheels is such an incredible brand. It's a huge canvas of ideas and innovation and product and opportunities. Hot Wheels was up 16% in the quarter. For the full year, it was, 16% for the full year. And it was the 6th consecutive record year for the brand after over 50 years of existence. So it's been on a real, real growth momentum. We gained almost 300 basis points in the category. We have by far the largest market share on record. And Hot Wheels continues to be the #1 brand globally in vehicles per Circana. In 24, we expect our vehicles category to grow, driven by Hot Wheels, and Hot Wheels will grow yet again, 7th consecutive record year for the brand. And don't forget that we have a movie in development with J.J. Abrams at Warner Brothers for Hot Wheels, and another movie, a Matchbox movie with Skydance that produced Mission Impossible and Top Gun. So 2 of the most successful filmmakers in Hollywood are working on 2 very exciting brands as part of our vehicles portfolio.
How profitable is that area becoming for you? You know, we talk about Barbie, highest grossing film of 2023, generating, and I hope I have this number right, something like 1.4 billion or so, give or take a little bit. What ultimately was the impact on Mattel's bottom line as a result of that movie? I'm just curious.
Yes, we were happy to share that the Barbie movie generated for Mattel in 2023, just 2023, $150 million of revenue and about $90 million of operating income directly related to the movie. This is box office plus toys and consumer product directly associated with the movie. So this is one brand, one movie in 1 year. And the reason we share that is to illustrate the potential that we can generate out of our growing entertainment business.
Right.
And while we're not saying that every movie will be the next Barbie, in the aggregate, this could become a meaningful part of our business. Our entertainment offering that includes film, television, live events, consumer product and merchandise, digital, music, location-based entertainment, in the aggregate across our portfolio can be an important business for Mattel. And clearly, we are on that path to capture that value. And the Barbie movie is really a showcase or a template to illustrate that.
Well, it's a success story, right? I've got to imagine, you talked about a couple of movies already based on Mattel products, toys, if you will, intellectual property, whatever you want to call it. But I do wonder how many people were knocking on your door after the success of Barbie, where many would probably have thought it never could happen, and it did. Are a lot of studios, streaming, and what have you knocking on your door about future collaborations?
Well, you can imagine what the movie did in terms of showing that our brands resonate outside of the toy aisle. And this was something that was not obvious before, and clearly the Barbie movie showed that with the right creative vision, when you work with the best filmmakers in the world, like Greta Gerwig or Margot Robbie, Ryan Gosling, great things happen. And perhaps the biggest evolution for us as a company was to realize that people who buy our product are not just consumers, they are fans.
Right.
And in the aggregate, fans become an audience. And that's when you realize that you're actually speaking to an audience, that's where you see, that's when opportunities open up and you can capture and create significant value in other verticals.
Hey, listen, 20 seconds left, 25. Is it going to be a Barbie 2? Does Alan get a movie? Does Ken get a movie? You can make news right here with us. Just got about 25 seconds.
You know, we always said we're looking to create and build and develop film franchises. We're not talking specifically about Barbie, but we have an incredible portfolio, and we're looking to continue to excite and delight fans all over the world.
I'm just going to say, Barbie's a doctor, an astronaut, president. She can be a tentpole, you know, in terms of.
Carol loved the
film
movie, in case you didn't know
franchise.
that by now. I think it's the second quarter in a row we've interviewed Ian on, and she's talked about how much she loves
I
the
bought
movie.
Barbie merchandise.
You're not alone, Carol. You're not
I'm
alone.
Thank you, Carol.
Totally
Thank you, Tim.
transparent.
Thank you.
Enon, always be well. Appreciate it. Enon Krais, he's Chairman and Chief Executive Officer of Mattel, joining us on Zoom from El Segundo, California. You're listening and watching Bloomberg Business Week.
Bloomberg World Headquarters, I'm Charlie Pellet, 1 point away from S&P 5000. Right now, 49.98 and change. We're on S&P 5000 watch, up 3.5 points right now. That is a gain of just about 0.1%. We got the Dow Jones Industrial Average, 38,713, higher now by 36 points, up 0.1%. NASDAQ Composite Index up 45, 15,802 on NASDAQ, a gain right now of 0.3%. Got to keep it locked in to Bloomberg Radio right through the close and beyond to see how things shake out for the S&P S&P 500. Right now, we've got the 10-year 4.16%, the 2-year 4.45%. Gold down $2 the ounce to $2,033, drop there of 0.1%, while West Texas Intermediate crude up 3.5%, now $76.46 a barrel. ARM shares surging now by 50% after earnings, but what about the broader technology picture? Ethan Devitt is Chief Investment Officer at Moneta Group.
There's a macro trade around the tech stocks for sure, and we saw that with ARM today. When it comes to anything AI related, can be explosive in terms of the upside. But what we can also see is that expectations are priced to perfection. So when something like Snap yesterday, which was disappointing, was citing the concerns around privacy, and clearly subscriptions were up, subscribers were up, users were up, costs of acquisition were down, but at the same time it wasn't enough. It wasn't enough to satisfy the earnings.
She mentioned Snap today lower by 2.9%. Devon Energy, an Oklahoma City-based oil and gas company, is in talks to acquire Calgary-based driller Enerplus Corp, this according to Reuters. Again, recapping, stocks are higher with the S&P 500 index right now at 49.99. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So closely watching the S&P 500, 49.98 to 87 is your trade. So
what are you going to do when it hits 5,000, Carol?
I'm going to report it on air, and then I'm going to move on.
Where were you when the S&P 500 almost hit 5,000?
It's a level, folks.
Okay.
Technicians might say it's something more, but what I really think is interesting is the technical chart on ARM today. We talk rallies, and then there are rallies like what we are seeing in ARM Holding today. Chip designer ARM Holding surging more than 64% today at its high to a record, and Tim up the most since its IPO last September.
ARM issued a surprisingly bullish earnings forecast, showing its push beyond smartphones is helping fuel growth. We knew that we had to go back to it after talking about it late yesterday following ARM earnings and getting an update. So we've got a great roundtable. With us are Ian King, Bloomberg News U.S. Semiconductor and Networking reporter. Also, Kunjan Subani, Senior Semiconductor Analyst for Bloomberg Intelligence, both joining us from San Francisco this afternoon. Ian, I want to start with you. We were all over this yesterday. So were you when the company reported these blowout numbers. The dust has settled somewhat, but I want to start big picture here. Remind our viewers what exactly ARM does and how it differentiates itself from everyone else who's in the space.
Yeah, they're kind of in that sort of middleware space. I mean, they license what's called an instruction set. These are the basic pieces of software that chips and software use to talk to each other, and that goes into everything. And they also license parts of chip designs, which all manner of companies use, Amazon, Apple, and lots of other companies kind of sign up and design their own chips based on these portions that ARM sell them. That said, ARM, though, is obviously increasing its scope and moving closer to becoming a company like Qualcomm.
And Kunjan, is that what it's all about? This, how do you justify this hockey stick move that we are seeing in ARM Holdings today, up 64% at its highs, now up about 50%? Is it because it's becoming more like a Qualcomm? It's moving out beyond just what has been its bread and butter?
I mean, look, there were definitely a lot of positives in the earnings, so I don't want to take anything away from it. But it seems to me a key driver of this kind of a pop has to be coming from a combination of fear of missing out and the search for the next true AI semiconductor name beyond NVIDIA and AMD, which can generate revenues starting now, this year, rather than a promise of future. So I think the earnings highlighted a couple of things which investors now feel comfortable that ARM can definitely monetize and take a bite of this AI spending frenzy starting now.
What were a couple of those things that it highlighted, Kunjan?
Yeah, so one is their rising penetration of their V9 architecture. It is definitely right now a lot more in smartphones, especially with the launches of Android flagship phones like Galaxy S24, which are touting AI features. So as that penetration continues to rise, for every V9, they get 2x ASP uplift compared to a V8. And more than that, it was also their wins outside of smartphones in data centers and automotive. Look, they are now in the NVIDIA Grace Hopper chip, right, and Amazon chip, Microsoft chip, and I think they are definitely in talks with engagement with other large hyperscalers. So each of those design wins gives them a significantly higher royalty rate than what a smartphone design win does.
I always think about, what this means, and I know we talk about this a lot with you, Ian, in terms of what it says more broadly. Is this really a very company-specific story, or is it more, indicative of some of the broader trends that are happening in the chip industry?
I think a mixture of both, and obviously we addressed the company-specific side of it yesterday. But I think, to Kunjan's point, what people have been looking for here, because we've heard Qualcomm say it, we've heard Intel say it, we've heard lots of companies say, hey, AI chips aren't just about NVIDIA accelerators, they're about all kinds of things, smartphones, cars, whatever it is, they're going to need more computing in order to be able to get AI to work. And everybody's saying that, but nobody's proved it in the numbers yet. Have we heard about the AI PC, but have we seen a big hit from? No, we haven't. Yeah. This is probably the first company to sort of show any real progress in that front.
So Ian, talk to us a little bit about where we think it's going, or where you think the industry is going, because part of the theme of this report was that it is moving beyond smartphones. So talk to us about the other products that we see this show up, and where you think investors are the most bullish.
Yeah, I mean, we spoke with the CEO this morning, as you know, and he said, look, I'm in Teslas, I'm in the Ford F-150, I'm in smart home devices, I'm in your Samsung TV. I think the answer to your question is we don't know yet, right? Yeah. The device you carry around with you all the time is obviously the smartphone. Put more intelligence in that and it becomes a platform for all kinds of things, and we've seen that historically be the case. That is the obvious candidate, but again, we haven't seen that yet. We've seen that talked about. But if history is a guide, it's always the unlooked for thing. And a company like ARM, a company like Qualcomm or Broadcom, they're creating what they call as a platform, which is basically saying to the world, hey, we're giving you these capabilities, now go out and find a use for them.
Kunjan, same question to you. I mean, when Ian's talking, it makes me think of something like, the Apple Vision Pro headset. I still haven't seen someone walking around with it in the real world, but is that the type of device that investors are optimistic ARM can play in?
Well, that's the ultimate promise that everyone's trying to sell. But going back to the point, right, not all companies are able to show that in the numbers. So as of right now, what ARM is able to show it is in data center, the core use of AI, generative AI, and in automotive, where we see a lot more silicon and AI adoption. So that's where that's sort of the next immediate end markets and use cases, and followed by smartphones and the promise of AI PC.
One of the other names I wanted to roll into this, guys, is something else I saw, Monolithic Power. It's another name, a semiconductor device company. It also is out with fourth quarter results that beat expectations, positive outlook. Analysts noted a tailwind from AI, and we saw this one. I know it's among some of my gainers that I'm keeping an eye on today. Let me just pull it up on the Bloomberg, but you're looking at a 14% gain. Ian, is this another name on your radar by any chance?
I mean, the power semiconductor sector of the industry, I mean, they're relatively small. They're not particularly expensive products, but that's been something that people have been sort of excited about as it pertains to automotive. Basically, you have more EVs, and you need more ability to convert power into various different voltages and distribute power effectively in a complex electronic system. And that's where companies like Monolithic come in, and we've seen other companies kind of ride that wave as well. The argument that extends beyond EVs is, well, if we're going to have more and more smart devices out there in the world, then getting that battery power out of the battery and into all of these different components is going to become more important. So we're going to need more of this type of chip.
I am curious, when I talk to two individuals like yourself, and Kunjan, come on back in this, what is it that you think about most? What companies kind of occupy, your brain space the most, and why?
Yeah, so on the AI side, we think the top contenders right now are definitely NVIDIA and AMD. But outside of that, ARM and Broadcom, and to some extent Marvell, these would be sort of the top 5 names that I can think of who can immediately start monetizing a portion of this AI chip spend.
Go ahead, Ian.
Same to you, Ian.
Yeah, I mean, Kunjan just gave you the right answers, right? He just scored 100% on the test. What I think interests me is can the empire strike back here? Can Intel parlay what it's supposedly capable of doing, what it's planning to do, into a dominant position. Again, it's trying, it's saying all the right things, it's got all of the things in place, but we haven't seen the kind of progress I think that we would want to see to this point. That, to me, is the big story and the fascinating one of can they or can't they.
Ian, very quickly, we have 20 seconds. Are any analysts out there saying today's move is not warranted for ARM?
Bernstein have been very careful, shall we say, or cautious on their approach, and they reluctantly went out there and said, well, you have to hand it to them, this is pretty good, but, you know, there's always a naysayer, right? There's always somebody betting the other way.
So it makes a market.
I was just going to say that.
All right, guys, listen, thank you so much. So appreciate it. Ian King, U.S. Semiconductor Networking reporter at Bloomberg News, joining us from San Francisco. Kujan Sabani, senior semiconductor analyst, also out there in San Francisco. He's, of course, a member of our Bloomberg intelligence team. But ARM, again, on a tear, up about 50% off its highs, but nonetheless on a tear on this Thursday.
Hey, let's get world update on world and national news. We got Nancy Lyons in Bloomberg 99.1 Newsroom. Hey, Nance.
Thanks, Tim. President Biden knowingly stored and disclosed classified documents and kept them in unsecured locations at his homes in Virginia and Delaware. That's according to a new scathing report released by the Justice Department. Special counsel Robert Hur concludes Biden's conduct was improper, but he does not plan on filing any criminal charges. Hur says a jury would likely find Biden a, quote, well-meaning elderly man with a poor memory. The White House says it's pleased the probe is over, but objects to what it calls inaccurate and inappropriate comments. Chief executives of 3 major pharmaceutical companies came under fire today for high drug prices during a hearing of the Senate Health Committee led by Senator Bernie Sanders. We get more from Bloomberg's Irv Chapman.
Senator Sanders questioned Robert Davis of Merck. Is it true that the list price of Keytruda is $191,000 a year in the United States? That is close to being true, yes. Is it true that that same exact drug can be purchased in Canada for $112,000 a year and $44,000 a year in Japan? Generally, yes. Does Merck make a profit selling Keytruda in Japan? We do. Davis and his colleagues from Johnson & Johnson and Bristol-Myers Squibb added that they have programs to supply drugs cheaply to those in need, and U.S. patients get new drugs sooner and for more conditions than in other countries. In Washington, Irv Chapman, Bloomberg Radio.
Athletes who plan to compete in the Paris Olympics this summer can look forward to winning a unique type of medal that includes a piece of the Eiffel Tower. Joachim Rosan is the head of design for the organizing committee.
We wanted to have this French touch, and we thought that the Eiffel Tower would be this cherry on the top.
The piece of wrought iron from the tower will be shaped in a hexagon. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
Bloomberg World Headquarters. I'm Charlie Pellet, 49.98 on the S&P 500 index. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. A modest bid in stocks in a choppy session. The Dow's currently up 36 points. S&Ps are higher by 3, while NASDAQ rises by 0.25%. The U.S. 10-year yield at 4.16%. Gold is little changed. Oil is climbing. And Bitcoin is higher by 3%. Among the main 11 S&P sectors, leaders were energy and real estate. Utilities were under pressure, and leaders to the upside in the Dow, Disney and Home Depot. Note that Disney had its biggest gain since 2020 after earnings, while Verizon and J&J led to the downside. Also after earnings, Ralph Lauren rose 18%, PayPal plunged 12%, and in deal news, Devon Energy is in talks to acquire NR+. In other news, Bank NYCB fell another 7%. And wrapping things up, some of the names reporting after the bell tonight include Expedia, Pinterest, and Take-Two. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Again, right now, the S&P 500 index, 49.97. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, as you know, you've been listening to Charlie Pellet. I mean, we got so close to 5,000 on the Dow, 4999.37. So right now we're off of that, but we got pretty close.
We got 4999.37?
499.37. Yeah.
We'll see if we'll get there today.
We're at a record, though, right?
Yeah, we're at a record, but we're not at 5,000.
No, we're not at 5,000. Up we go, up we go. I'm just looking at where we are for the year. The Dow is up almost 4.8%.
Okay.
On this February 8th.
Okay, so we're there.
6 weeks, 7 weeks in.
Yeah, I know. That's the thing.
Yeah.
What does the rest of the year look like? Hey, we got a great guest to ask that question too. Cheryl Pate is Senior Portfolio Manager at Angel Oak Capital. She joins us on Zoom from Atlanta. Cheryl, good to have you with us. It's been a few months since we spoke. How are you?
I'm doing great. Thanks for having me back on.
How does the rest of the year look like, given that we have made such big gains in such a short period of time?
Yeah, I think a lot does depend on how we're moving through the economic cycle here. And I think we've been encouraged by a lot of the data that has come out of late. We have been in the camp of expecting a soft landing and looking for the first rate cut to come in June, but moderate cuts, over the course of the second half of the year. So I think we've been encouraged by the balance between employment and inflation where we are today, and look for that to sort of continue to move in an orderly fashion, which I do think supports continued growth in the equity markets.
You are portfolio manager for the Financials Income Fund, Financial Strategies Income Term Trust, the Dynamic Financial Strategies Income Term Trust. Where are the flows? Where are the flows coming in? Where are the flows going out?
Yeah, it's definitely has not been quiet in the financial sector last year and this year alike. So it's been, I think, a lot of conversations. There's clearly some dislocated markets, both on the equity and fixed income side in banks in particular. But what we're really seeing is dislocation creates opportunities. And I think there's a lot to parse through the big banks versus the regional banks versus the community banks and where the relative value lies there. We're particularly more bullish on the large cap banks, more diversification, more of a skew to consumer. We like the community banks as well, relationship driven, strong franchises. And I think we're much more cautious on the regional banks, given regulatory costs increasing, given commercial real estate concerns.
Yeah.
And we're starting to see some of that play out.
Okay, give me the distinction between community banks and regional banks, please.
Yeah, when we look at the sector overall, I would say community banks are sort of that 50 billion and below in asset size, really localized to a specific geography, whereas regional banks, kind of go up to that 250, 300 billion kind of mark, and have grown across different geographies in different asset classes and have a little bit less of a relationship focus, more of a commercial real estate exposure as well, typically.
How much are you kind of marking time a little bit in terms of maybe moving some things around in your portfolios just because you want a little bit more clarity on what the Fed next does? Everybody's widely expecting it's going to be a rate cut. It's just kind of when and how much. But, I'm just curious how you see it and kind of how you hold off before making any kind of really decisive bets for the rest of the year, waiting for the Fed.
Yeah, I think, a couple of things that we're always looking at, net interest margin trends, and we have been looking for pressures to abate there, particularly as you move closer to a rate cut environment. But I think one thing we've been encouraged by is the fact that fourth quarter earnings, I think, actually showed better trends than anticipated in sort of calling the bottom on NIM compression and actually seeing some expansion in some cases. So that's something we look at. We're also very closely monitoring things like consumer delinquencies, where we think we've hit sort of peak deterioration, and the bar is moving to a more positive and constructive view there. So I think, willing to put money to work on the larger cap side and sort of placeholder on some of the, longer tailed stories from here.
Got a favorite couple of names? I think BAC and JPM are some of those that you look to outperform. Talk to us a little about that.
Both, on the large cap side, I think, we always look for stories that have really good deposit franchises. There's a lot of value to those deposits in the rate environment we're in today. We look at excess capital as a driver of value, and then diversification. I think you've also got sort of fortress balance sheets, particularly at JP Morgan, which I think is increasingly critical in today's environment where there's a lot of fear in the market and a lot of volatility coming into the equity prices.
Are you concerned about anything out there? Like, are cracks starting to show when you think about the consumer or the macroeconomic environment?
I would say I think we've been pleasantly surprised at how well the consumer is holding in. And given where we're seeing credit card and auto delinquency trends, we feel probably better about the consumer side of things. We are, I think, starting to see some cracks in commercial real estate. Not necessarily a surprise. It's been a known concern for some time, and you are starting to see some delinquencies tick up. Clearly, we've been seeing reserves building for some time. But I think the next couple of quarters, we're going to start to see more deterioration, particularly in office. And that's one area that we're paying particular attention to.
Listen, this is your world, even though you may not, you're not keen on the regionals at this